beautiful sun day, right? Sometimes we gotta put that hyphenate in between that sun and day, as we know it to be, you know, pliable to our reality in terms of what we know and knowledge. Now, it's just a Sunday. That's all it is, just another Sunday. No, I just kidding. What's going on, everyone? Power and profit to you guys. Uncle Johnson Neb. Happy to see you guys in the building today. I know it's Sunday. Like I was saying, some of you guys are probably out with your family, your friends, enjoying, what this world has to offer you guys in some kind of form of activity. TV. Again, I don't know if there's any kind of sporting events on right now. I know this is the kind of the dead zone of the year when it comes to TV value and sports. Outside of that, you have track and field, and you have, I think, soccer, or what they call it football, but soccer. I call it what it is, soccer. And so there's not a whole lot of things going on in terms of sporting events unless you're out performing them yourself physically. So what better time to utilize this great, access or excess of time studying, training, getting prepared to go out there and tackle the most interesting, engaging, uh, 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 exciting aspect of a stock market, right? The best sporting event in the world to me, if you ask me, is where you can sit in front of your computer, analyze some data in relation to other people doing the same thing, place your trade, and walk away with a bag of money. And you did all that from your cell phone, your tablet, or your computer. Best sporting event ever. I guess I just made it up out of nowhere, right? But it makes sense, right? Logically, right? And trading stocks is just like competing in the sports arena, right? And I'm pretty sure some of you athletes that are out there who are listening, who have been in high competition combat in some kind of form or fashion, can relegate some of the things we do from a day-to-day basis, in essence, to how it relates to trading the stock market, right? The different emotions that you deal with, the different values or skill sets that you have to be able to acquire, the level of training, your preparation, right, your due diligence, right, all these different things that make you realize, okay, this is reality, right? This is a sport event in its own way, right? And so again, just being able to touch on some stuff today, um, with this training session in terms of, you know, swing trading, front loading, right? Utilizing the market at your advantage, right? For some of you guys who have, again, 9 to 5s, corporate jobs, things of that nature, people always ask me, they'll inbox me and say, hey, brother, I really want to get into this trading thing. I really want to get invested, but I feel like I don't have enough time, right? I don't, I can't sit in front of the screen all day like you guys are, or, things of that nature. So they're trying to figure out how can they find themselves in a position to be, accessing all this extra, your streams of income through obviously, investing, and be attentive to it in a way where they could be, profitable, right? So it's not really that complicated when you really think about it, right? So, and I'll say it from this perspective, a lot of the times when when we spend it doing, leisure activities, again, you know, hey, whatever, you're going to the park on the weekend with your family, hanging out with the guys, even at the bar, watching a sporting event that lasts 2 and 3 hours, right? Or something to that effect. Well, interesting enough, you have to have number one, an interest to want to do those things, and then you have to have, the allotted time to be able to perform, or to be able to sit and watch these things perform or happen out in real time. And so when again, you liken that to investing in trading. Well, those are some of the essential ingredients that you need to have in order to be successful in being able to obviously invest in the global markets. Time, right, and the interest, right. The two most, I guess we'll say, realistic ingredients is time and interest, right. You have to have an interest in this, right. You have to have a passion, or you have to have, like having the wherewithal to to want to be the best at it, and so to speak, and then allotting yourself the time to be able to do this stuff, right. And so again, when we look at the ideal of this being something that's just larger than life for some of us that's already kind of tackling it, we realize that, man, given opportunity and we had ability to do, to learn this, let's say back in our teenage years, this would have been a no-brainer if I understood the magnitude of it to the degree where you know there's no ceiling or cap amount of money I can make in doing this. Oh, I'm not landlocked to a specific brick and mortar location in terms of a job scenario where I have to punch a clock every day. man, this is a no-brainer, right? You're not gonna, double take or double think this thing through in a way where it is not necessarily, necessary, basically, right? So you saying, okay, well, okay, I get it now. It took me a little longer to learn this stuff. Granted, but I really want to be able to do this, but I really just don't feel like I have the time. And I'm like, well, if you really understood the complexities that are really simplistic in this nature, in terms of how you invest, the same way you save to buy a pair of shoes, the same way you save to buy your first home, the same way you save, to make any kind of large exorbitant amount, price investment. Well, in essence, that's the same thing that you're doing when it comes to, granting yourself the ability, in terms of the time to be able to invest in the market, right? You're just looking over, again, news articles, public, news press releases, publication articles, this, that, and the third, interpreting the data, seeing how it relates to, other competitive, businesses out there that you're actually looking to, acquire some kind of product or service through, seeing what the overall market sentiment is, meaning people very bullish on the market, or they not, or the, is Trump tweeting today, whatever, and then you're saying, okay, well, at this juncture, it seems like it's a pretty good scenario, right? The stock is obviously at a point where it's kind of been left for dead. It's oversold. Again, that's before you get to the minutia and break all that stuff down. When you learn the minutia of trading in terms of oscillators, indicators, these different things that give you a kind of inclination to say, well, hey, this stock is in a good place right now, basically, in paraphrasing terms, layman terms. It's in a good place to buy it right here, right? And so, in that perspective, you're saying, okay, well, hey, it looks like it's a good attractive buy right now. It's at a discounted rate, right? The whole goal is to buy low, sell high, right? That's what we're here for, right? Buy at the most lowest price possible and sell it high. Well, before you can even do that, you have to have what? Discipline, right? You have to have a level of discipline within you to not, be as they old folks say, don't be so giddy, right? don't be so quick to jump out there. You have to have enough patience to realize, when is a good opportunity to buy, right? And so when we think about swing trading or front loading, so to speak, buying the stock ahead of time before some major catalysts come out or news piece come out, well, this is in essence great for that person who's in that position where they don't have all day to sit in front of the screen, right? Or even for a person who loves to, that has the time to day trade, but they don't want to deal with this kind of natural, up and down volatility throughout the day that kind of wears on their psyche, right? One minute you might be making money, the next second you might be losing money, the next second you might be just going sideways, and now you get like watching paint dry. You're like, this is going nowhere, right? Then you start getting apprehension. Y'all thinking like, man, what if the bottom fall out? You start, having conversations inside your head that kind of talk you out of your trade, right? Talk you out of your natural ability to assess, the situation properly and make a very informed, decision that got you in the trade in the beginning in the first place, right? You lost your conviction through, obviously, second guessing yourself, so to speak, right? So in essence, when we're talking about front loading and swing trading, that actually eliminates a lot of that kind of natural, whipsaw action in terms of volatility when it comes to intraday trading. Because now you're having to really trust that you've done enough of your research, enough due diligence, right? Studied this situation, to the, the best of your ability, and then you place the trade under the auspices that you've taken it far as you can take, and the rest is up to the market. You feel a lot better when you put that kind of work in, you put that level of interest in, you allotted that much time to make sure that you're thorough in your decision making to go ahead and place that trade, and you can walk away from it for at least one day. Because it's basically what all the swing trade is. It's to buy stock one day and hold it until the next day. Right? Now that next day could turn into 2 days, 3 days, 4 days, a week. It can even be further. Right? Depends on how the stock performs. Right? And so when you think about it from that perspective, it lessens the stress, it lessens the pressure, it lessens the anxiety, right? And you start realizing, okay, this is what investing is all about, right? Because ultimately, let's be honest here, when it comes to investing or an investment value, it's to always to think long term, right? The slow and steady, right? It's a marathon, not a sprint, right? We always kind of preach that, quote unquote, religiously in this forum, or in this, in this circle of, of traders and investors that we hang around. We realize that's the ultimate goal, to get to a point where we could put, 5 grand, 10 grand, 20 grand, 100 grand, dispersed, equally throughout a plethora of different stocks, right? A diversified portfolio, and then let them go to work, right? Some of it can be in margin, some of it can be straight cash positions. But either way, we want to see that that money can go out there and what attract other monies to come back with it, right? It's that whole law of attraction, right? Your money has to equal that of your mentality, right? So when we think about the law of attraction, we think about being able to whole and somewhat of a even an out of body experience. Weird because we was talking about that today on my Dagger Squad channel with the family over there about deja vu, out of body experience, all these different things like that, DMT, whatever. I don't want to go sidetrack, but I'm saying in essence to our money, we want to be able to put our money in that kind of mentality, right, into that particular space, and say, well, hey, I've equipped you with everything you need to be, thorough and going out there attracting other people, all right, in terms of other money, what I'm saying, right? And so that's the part of trading that's very, very I would say pliable to the average person who doesn't have the time to sit in front of the screen every day and do a lot of what day trading or momo trading or momentum trading, things of that nature, right? It eases your whole value of anxiety down to stress level maybe like 10, right? It's supposed to be in 90, 80, in that range, 100%, right? And so that's why I find it to be very interesting how a lot of us overlook the ability to swing trade, right? Everything doesn't have to be so in the moment, right? We know that sometimes a long-term investment can end up in a sprint type, reality. It could end up turning into a day trade. You set your intentions to say, well, hey, I'm gonna place this trade in essence to try to, see if I can realize like 10% out of this trade, right? Which in a lot of ways, people look at 10%, it's like, man, that's not a lot. But then to people who have a substantial amount of income, and if they can get 10% on 100,000, right, or 10%, on 10K, well, that's a lot of money, right? And that's right. Again, no one defines what you value a lot of money, but you anyway. So let me clear that up. So you always gonna hear people say, "Well, man, that ain't no money." Well, it depends on who it is, right? You can't. Another person can't count your pockets or your reality, right? So let's get that out the way out the gate. And so that's why we always come from a position of, hey, find your own niche or your own niche, niche, but steal from everybody, right? Learn a little bit as you go from anybody that's out there willing to give you some good data that you can build with, right? And so within that, you'll find your level of success in terms of what makes you feel comfortable to, grow into this at your most, available and right opportunity. And you won't feel like you got to be forced into saying, well, man, I got to keep up with what them guys doing over there, man, or I'm not feel like I'm, a part of the fold. That's not how trading and investing works, right? Because at the end of the day, when you hit that buy button, you're using your money, right? You're not using somebody else's money. Well, unless you got a margin account, that's another story for another day. But again, ultimately, you're making that decision based upon the money you put forth, not so much of what they're doing. And so, even in that moment, you have to realize that it's not a competition against nobody else. It's a competition against you in the market. All right, let me repeat that. It's not a competition against you and somebody else, unless you're doing a friendly wager, but it's you against the market. And so, everything that you need to direct towards you being successful is going to be relegated again back to you being able to be studied up and prepared to deal with the markets are going to throw you, right? Because again, we know all the different slogans, all the cliches, all the different monikers people use out there, the mantras out there concerning the market. But ultimately, it all boils down to the market is always right, right? Even though when it's, adamantly and blatantly wrong in terms of the data, in terms of the fundamentals, the technicals, even sometimes price action, the market is always going to be in a position where it's going to be, the driving force at the end of the day. And it's our best interest to be on the right side of the trade and not have to fight the market, right, to be successful, right? And so one of the ways you can do that in some cases is learning how to swing trade, right? And typically, it's fun too because I saw a stat maybe, gosh, I want to say like 3 or 4 months ago. I was watching this debate between, I think, Peter Schiff. Yeah, some of you guys may know him. He's the big gold bull, like the biggest, bullish trader when it comes to gold than anybody on the planet, right? He loves the gold standard of life. He wishes everything go back to the gold standard to get all this fiat currency, central bank kind of corruption, and all this stuff that everybody's pushing against right now. Even with the crypto market, going decentralized and trying to do away with all these central banks. Long story, right? Short, but in that moment, he was debating this guy, and they were saying, well, you know what? We looked at the data over the past fiscal year in terms of 2018 up into 2019, and what was interesting, they said that The majority of the money that was made in the stock market, guys, was actually made in the futures market and also the after hour sessions of the trading session, either pre-market, after hours, or the futures market. And then somebody was like, well, man, that's kind of weird. How would you say that? Because again, when we see the market open up and all these stocks moving all over the place, if you really look at the market from a daily perspective in terms of intraday, how the market moves up and down throughout the day, and it has big swings up 2-3%, down another 1%, up another 0.5%, then up another higher 2%, then back down 3%. It basically ends out at the end of the day around about what? About 1%, 1.5%. Through all that volatility, you're not really getting a whole lot of natural progression throughout the day to say, well, okay, we ended up here, right? We started here and then we ended up like right here, right? But at the peaks, right, the troughs and the valleys, right? When you say troughs and valleys, right, y'all know what all that's all about, peaks and valleys, right? At the top of the mountain or at the valley base of some of these different moves in terms of the volatility of the market, you would think that it's like this, just like this is crazy. All this money being made, why the market ain't end at either at that top piece or at that lowest piece, and that's because out of all the people who are trading the market in real time through an intraday, and you couple that with the algorithms, right? The bots, the algo bots that are out there trading too, that has obviously more control of the market than even the actual physical trader does these days. They're already baking in so much of a move that they're looking to get out of the market, because again, big money at the end of the day, as the old school saying, big bank take little bank. Well, y'all remember hearing that, some of y'all old school people in there, right? Well, I think that was Ice Cube, one of them old school back in the old days. Y'all get it. But that's what happens at the end when we tally everything up at the end of the day. You realize you only gained 1.5%, right, in the spot, right? Or 0.75% in the S&P 500. Now, and that's only if you're trading that ticker and that ticker alone. Now, that could be, again, a lot of money if you're leveraged properly and you have a margin-based account that gives you the ability to capture all that, 1.5%, and you didn't sit there stressed about, it got way up here at 2%. Obviously, if you didn't take profit up there, then shame on you. But again, when it came back and fell down below the equilibrium mark and hit maybe like went under like 0.75% or 0.1%, something like that, just paraphrasing here, right? And you didn't panic and sell there because you didn't think the thing was going to rebound. Well, this is the part of why, if you position yourself to think more of a swing trader, even though you have all the different tools and the auspices of a day trader, it'll lessen the stress that you have when it comes to again, placing certain trades that you're not 100% convicted to trade, right? So my motto is, some of you guys who follow me, y'all know my motto, right? I got the 4 questions, I call them the 4 horsemen, right? We're going to call it the 4 horsemen, right? Right? There's 4 things you got to ask yourself every single day before you take a trade. All right, for some of you guys who follow me, all right, I want to see if you guys are paying attention in the back chat. I see you guys coming in a little bit. Power profit to everyone, first and foremost. I see we got Oba Marquise in the house. We have Oba Gordon in the house. We have Oba Sunline in the house. Oba JL in the house. We have my brother Mr. JRH in the house. Good to see you, Oba. I see my family Lennox John in the house, and anybody else that may be listening in the background. I know you guys may be busy again, but there's 4 things I always stress more than anything. When I'm training or teaching or whatever, sharing information that you need to be real, very, cognizant of before you take a trade. What are those 4 things, guys? Let me see if some of you guys been paying attention to you, brother. Right? What are the 4 things I'm always asking you guys to ask yourself before you take a trade? All right, so throw that in the back chat if you guys following along with me a little bit here, so I kind of see where you guys at in terms of being able to remember it. And not that you have to use my system. Keep in mind, the goal, like I've always said, find your own niche or your own niche, but steal from everybody, right? Steal a little bit from everybody, right? Because there's no patent on knowledge when it comes to the market, unless you got some kind of trademark algorithm or scanner. And the only way I can access it is if I go through what? Your system, right? And that's the only way, a paid system. But outside of that, all this information is free, right? Information and knowledge is free if you learn how to access it properly, right? So those 4 questions, right? It's the 4 W's. 100% right, Mr. JRH. It's the 4 W's, right? You can't get away from these 4 W's if you're a stock trader or investor. What? Right? I'm gonna type it in the back chat as we talking, right? What? Right? Why? Where? And when? Right? Very important, right? The average person be like, well, okay, what do you mean by that? What do you mean by that, brother? What does that have to do with the price of tea in China, right? Well, it has a lot to do with it. Right? It has a lot to do with how you perceive a certain asset over that of a other. If you have let's say you got a watch list, right? You got a collection of stocks that you looked at, maybe the day before, and some of them may be attractive to you in a way where you may want to take a position on them. And then what you're doing now, you're just doing what we call deductive reasoning, right? Again, least path of resistance, right? That's going to get you to the end goal to hit your goal. And let's say you start out that you position yourself to say, well, my goal for today is I want to be able to capture at least 5%, right? That's all I want, 5%. Again, now we know we have stocks that run 30% in a day, 50% in a day, 70% in a day, 100% in a day, 300%. I mean, come on. I mean, I've been in stock. Again, I still got some of the shares to this day. I've been in one stock that ran 15,000% in one day, and I never thought something like that would be logically possible, given the idea before I really knew about investing from a day trader perspective, in the way that I know now, that it could ever be possible, right? How people are sitting around making all this kind of money throughout the day, and the majority of us who had no knowledge of this was sitting around working that hard, working about 15,000% worth of value for this company, and only getting an eighth, a quarter, a third, a tenth of what the output was able to kind of generate. That's kind of backwards hustling if you think about it, right? I'm working this hard, producing all this income for this company, and they only going to pay me, not even a partnership, a third of that value I put out. They're paying you an eighth, a tenth, a tenth to that value of the work that you put out to kind of garner all this money. And so when we flip that script over and start thinking about it from a perspective of an investor trader, now it becomes even like, wow, the light bulb goes off. Like what? What did I just witness? A 15,000% runner in one day, intraday? Well, basically, all I had to do was put in $100, and I could walk away, well over what 15,000. Is that what you're saying? Yes, right. And you're like, again, why did it take me this long to learn this? And so this is why it's important, if you want to be the kind of trader who's consistently getting on base, as we always stress over here, getting on base as opposed to always swinging for the fences, then you have to be, again, very, very positioned and poised and disciplined to realize there's a strategy, there's a methodology, there's a rites of passage, so to speak, that you have to go through to get to that point where you can be consistently getting on base. And again, to backtrack this stuff in a way where it makes sense to you guys, let's break it down. What, why, where, and when. What are you seeking? What are you looking to acquiesce? What are you looking to, again, partial time into being able to kind of, to seek this opportunity as an investor or trader? Why do you want to do it? What makes it so important? Why is it so important, so to speak? Excuse me, right? What's why does it have the kind of the interest in a way that kind of captures me to, captivates me to it, so to speak, right? And then where, right? Where's the sweet spot? Where's the moment where I feel comfortable in saying, okay, this is a good enough level here. This is a good enough pivot here, or point of interest here, accumulation, consolidation, wherever, right? Or low RSI, whatever here, for me to kind of get ready to take this position. And then last but not least is when you pull that trigger, right? And it's funny too, when I break that down, that perspective, right? And we break that down in the, in the quarter pieces, right? Out of 100% reality. In actuality, the win part is the actual modality of actual executing the trade. That's the most easiest thing when it comes to what we do, is just hitting that buy button or hitting that sell button, right? Requires no PhD, requires you have to have no kind of special dexterity skills with your fingers and hands and even your toes to be able to perform that task, right? Because you've done all the hard work through the what, why, and where, right? Which constitute a majority of that constitutes having a strong and solid what? Psychology, a strong and solid what? Study habit regimen to have gotten you to that point of conviction, right? Because you feel convicted if you can answer at least three of those questions, right? I feel confident because I know what, I feel confident because I know why, and I feel confident because I know where, right? The win part is the easy part. And so that's why I always say, if you can answer three of those questions out of the four, then you're in a better position than most people. Now, even if you get into that trade and the trade goes against you, guess what? Don't cry about it. there's a thing called cut your losses fast, right? We know how to cut our losses fast, right? And so we'll just regroup and come at it another way. But at the end of the day, you did everything you needed to do to put yourself in the best position to be profitable. And you didn't leave out no steps. You didn't go in with with this whole FOMO, mentality, right? You chasing the gas, right? I forgot what they call it. I guess I'm having a flashback moment, right? I guess I'm showing my age, right? Talking all that jazz, right? You chasing jazz and all the other kind of stuff. So again, going back to the basis of this live stream, this training session is this is why it's important to realize the power of swing trading. This is why it's important to realize the power of front loading. Getting in the game ahead, before everybody else kind of come in, mess up the price action. Finding those type of stocks who are somewhat off the radar, off the beaten path. They've kind of been beaten up, left for dead. But over time, you've been constantly seeing the volume instead of increasing on that stock over time, right? The short seller interest value or percentage value is starting to decrease. I mean, the short sellers have gotten to the point where they feel like they sucked it dry. There's nothing left, so they're starting to cover their positions. Which obviously, every time a lot of shorts start covering all at once, it causes the stock to kind of gap up, right? It kind of fills those gaps of those shares that were allotted on the float. They started to get bought back, and now those shares become available to the float, especially if it's a low float. It causes the stock to pop or gap up, right? The whole science behind gap up, right? That's a science in itself, right? The physics behind what is the gap up, what is the gap down, or what constitutes it, right? And we'll talk about that one day, right? But again, these are the moments where you want to be ahead of the game. And so again, you're not stressing, especially if you're trading it from the options market perspective, right? Some of you guys been hearing me say lately, this is a great time to be learning how to trade options, especially if you're a person who works a 9 to 5, right? Or in a corporate setting. If you're not looking to buy these shares outright from an equity perspective, right? Buying it from a CUSIP perspective, right? Just buying, actual, stake in the company, share for share, right? Not even par value, but share for share. Then it's easier just to buy the options and give yourself the allotted time to watch the stock obviously move, and that's the way that you feel like it's going to go based upon all the data and the research, and the studying that you've done to kind of put you in that position to take that trade anyway. Two things that makes it very attractive: price point, super discount cheap. Right? We're talking about wanting to buy 100 shares of Apple, right, or 100 shares of the S&P 500. Right? Or 100 shares of Tesla, right? Trading at, what is it, like 230 something, somewhere around there, excuse me, somewhere, I mean, I think like 230 something right now. So to buy 100 shares of Tesla at $230, well, how much does that cost you? Right? 100 shares at a $230 ticket or price point. Okay, we ain't talking about no couple thousand. We talk about 20,000. We're talking about 5 digits here. Right? We're talking about a 5-digit notional buy value that you're trying to put down just to capture, $1, $2, $3. We know, Tesla moves a lot because it's a very volatile stock. But again, that's a lot of risk involved. And so if you can make that kind of, risk value make sense to you from a place of as if you're long-term investing, or if you're trying to day trade it, then I say, why not lessen your risk value and then buy it to the options market, where you get those same 100 shares for a heck of a lot less. When you write a contract, you're writing the contract in essence to get filled in a way where you're saying, well, hey, I think in a week's time, this stock's going to move from 235, right, up to, let's say, 240, like say 5 points, right, 5 little point move. And so when you think about it from that perspective, saying, well, stock, the stock typically moves about, $3-4 a day. On its ATR, I mean, its average true range or average trading range, typically moves between $3 to $6 a day. So obviously it can move that in one day, granted, with the right catalyst, the right scenario. So that already kind of checks out in your head. Well, hey, this is more than feasible. This is more than probable that I can get this contract filled and I can get my my price point met equal to that or exceed that in a week's time, before I have to deal with anything called time decay, right? The theta burn, right? We know about the theta. Some of you guys may know about options. You don't. We're gonna break that down one day, because I'm gonna really start going into option trading too, so you guys understand. One second, guys. Somebody must be cooking or something. I don't know what's going on. Hold up. Let me hold up 1 second. Let me see what's going on. See if my house ain't catching on fire. All right, guys, we back. All right, good to go. House ain't on fire. All right, just got in here, right? Just move, right? All right, guys. All right, so again, going back to what I was saying. So I was saying, hold up. Okay, yeah. So, in essence, to buying it from the options perspective, right? You'll lessen your risk value, value down to a lot less than you would do if you was to buy 100 shares outright of Tesla and risk it for that value to get 3 or 4 points, 5 or 6 points. 1 second, guys. I'm sorry. I'm sorry. All right, guys. Peace, power, and profit. All right, we back at it. Yeah, sorry about that, guys. I guess some cooking going on. All right, so again, like I was saying, so in essence, if you're gonna option trade, excuse me, being able to trade the options market, again, that lessens your risk. That gives you the ability to again front load stocks. Again, see where I'm going. I'm gonna tie this back into what this whole session is about: swing trading and front loading. You can get a chance to front load and also, you're going in with the mindset that you're going to hold it at least more than 1 day, which constitutes a swing trade, which lessens the stress and anxiety that you've already kind of foregone the idea that, hey, you know, I'm in it. I'm in. I'm in this. This is so-called race at this moment because I do naturally believe we're going to get a point, 2 point, 3 points, 4 points, possibly 5 point move in a week's time, right? And so, from that perspective, let's say you write the contract, for a weekly contract, and the prices may be, let's say hypothetically here. Let me hold up 1 second, guys. Sorry, this is like ridiculous. All right, guys, I'm back. Sorry. All right, hopefully we'll be good this time. All right, because that's piercing through my headphones. All right, so again, in that moment, you can get a chance to write the contract for Tesla. Matter of fact, let me see if I can open up my Tasty Work account for option trading. All right, let me go over here real quick here, guys. Just bear with me. All right, so you guys can kind of see what I'm talking about here when we're speaking about, you know, again, even looking at the market from different perspectives in terms of not necessarily want to buy the shares outright. When we're talking about bigger price stocks, we're not talking about penny stock, even though some of those stocks are traded as well in the options market. But again, we're trying to lessen our risk value, right? We're trying to mitigate this risk a little bit better, right? Which obviously causes to be kind of full of anxiety and stress because again, you think about your money when you got 23,000 on the line because you bought 100 shares of Tesla at a $230 ticker price. You're like, man, that's expensive, man. It's like buying a car, and this thing better ride good. It better shoot, it better say hello to me every day I get in here and crank it up. Things of that nature, right? Because you want to realize that you've done enough of your research and your due diligence to have got you to the point where you bought that vehicle that it was going to give you everything you needed and then some, right? If not, you wouldn't have bought the vehicle, right? Especially on time, not out of necessity where you had to do it like right away and you just didn't have the time to do the research. But typically, you're going to do the research first before you buy that car, right? Your first car, your second car, third, whatever. Before you buy that home, right? You're going to do your research before you buy furniture, things that you have to live with for the next few 5, 6, 7, 8 years, 10 years, whatever. You want to make sure it's a good investment, right? So I say the same thing when it comes to investing in the stock market. Why should it be any less of attention to detail, right? Articulate value that you put forth to put yourself in a position to be profitable. Why should you short yourself any less to put forth that same level of due diligence to be profitable in this, right? Because anything outside of that, you're just guessing, right? You're doing a whole lot of, educated guessing, right? Under the hypothesis aspect, the scientific, method, so to speak, right? And yes, you could be lucky at times, but we don't make money consistently in the stock market by being lucky. And luck is good too. Don't get it twisted in the stock market because again, you didn't get up in the mindset thinking that, well, you had a goal of 5%, 10%, that you was going to end up with 100, or you're going to end up with 1,000%, or even 15,000%, like ALRT did for me, right? Messed my whole mind up when that happened to me, right? We talking about a stock that went from doubles. It was an OTC stock at that. So it was trading at obviously under a penny, right? It was trading at 100th of a penny, right? Started at, I think, around about a 002 or 00. I think it was the 002 or 007. I have to go pull it up. But anyway, it went from that 002, 100th of a penny, all the way to over 15 cents, right? Over 15 cents. No, it was like, no, it went over, was it $1.50 or 50? I think like 15%, 15 cents. Excuse me. I had to go pull it up. But anyway, the stock ended up moving over 15,000% in a matter of about 3-4 hours. And so again, $100 turned into 15,000, right? All right. $1,000 turned to 150,000, right? Well, more than that, hold on, 1,000. Yeah, I think I got it right. Yeah. Right, but I might be have to move my decimal. I'm excited because I made a good little bounty off that little piece, right? So again, that's the power of again the ability where you come in with a goal, you set your goals realistically, right? We're not saying, hey man, everything has to go to the moon, everything has to just slingshot past the moon, go to Jupiter. No, okay, that's you're looking for home runs, right? That's not realistic in the stock market, right? Especially when you got big money out there like hedge funders and bankers, and institutional money who obviously causing a lot of volatility in the market because they're coming in with an influx of cash, moving the stock when they hit their little buy button, or when they broker or their pit worker down in Wall Street hits the buy button, and the incoming influx of capital, if they parse it out or if they just do it all in one, spike the stock, you may be trying to short sell it, and now you caught, because now they bought up a lot of the float, taking that lesson away from the short sellers, and now you stuck if you don't, have your stop loss set, right? That taking you out of your opportunity to kind of get your what? Your downside, movement in the stock. Right? Now you have to reevaluate yourself, so to speak, in terms of you want to stay in that stock or you want to get out. And so, guys, that's what this whole thing is all about. It's ebb and flows, it's ups and downs, and then there's always a moment of sometimes consolidation, accumulation, where we just kind of going sideways in a tight channel, right? And the tighter the ATR becomes, the tighter your Bollinger Bands begin to kind of tighten down on that stock. Meaning, from your indicators to let you know at some point that's going to break out either to the upside or downside. That's when we learn patterns and trends. That's when you want to start looking at some of these stocks too, especially when they're at a point of consolidation where they've been there for quite a while. The stock is only moving up, 10 cents here, 5%, 5 cent down, 20 cent back up, maybe 15 cent back down. It's in a tight range, right? And had it broke out really, right? Kind of like how Bitcoin did, right? Before it broke out. All right, my brother Marcel actually brought that up, Bitcoin, real quick. Let me just run over there, do that real quick, and I'll come back to the auction market to kind of show you what I'm talking about. Right? Let me share my screen real quick so you guys can see what I'm talking about here. In essence, to the whole Bitcoin reality, right? In terms of consolidation, right? Getting in early, front loading, right? Again, let's make sure we keep the theme of the live stream relevant. This is about swing trading and it's about front loading, getting in early, not having to fight the market when all the action is already happening. Getting in the middle of it. No, you want to get in before it all takes off, before it all happens, and so you could be comfortable. You could be, more poised to, to reap the benefits a lot more than having to get in and fight the day-to-day, rigmarole of the stock, right? The intraday volatility, right? So let me share my screen real quick here and show you exactly what I'm talking about in terms of front loading, consolidation, accumulation, things of that nature. If you look at Bitcoin, right, we're gonna use Bitcoin, right, as our thesis, right? Y'all know I've been trading Bitcoin ever since 2017 when it broke out. I was at that point. That's when I first kind of got with my family over at Dagger Squad. And was, add my little flavor to the, the fold of the financial literacy aspect, what they do over there under the urban economic empowerment, right? I bought into kind of the stock market aspect of it, right? Again, never came in with the idea that I'm some kind of guru or master trader. I'm just a person who has a passion for investing and trading, who want to see other people succeed and finding multiple ways to get to other streams of income. Well, here's another stream of income that you can endeavor tap into that doesn't require a lot of you from a place of where they're going to kind of redline you or kind of kind of discriminate against you or whatever. They can't do that to you at all, right? Whether you got felonies, baby mothers, none of that stuff don't matter, right? They don't care about your credit, none of that stuff don't matter, right? It's all about, do you have the money, right, the knowledge, right, and the apparatus to be able to perform in this free world trading market, right? And that's all you need, right? There ain't no screening process here. And as I've always said, again, religiously, that you can open up a brokerage account a lot faster than you can open up a bank account. All right, let that marinate. Some of us already know that now because we already in the game, but a lot of people don't know that. And your bank account will never pay you the interest, or the compounding interest value that you could ever get out of putting your money into the stock market, right? Which is, to me, again, really at the end of the day, is really one of the the eighth wonders of the world, right? Now we know Albert Einstein called compounding interest again the eighth wonder of the world in his mind, because that was the one mathematical equation that used to stump him, that he could not believe how, if you keep principal amount investing or principal base applying a certain amount, over time, and how the compounding, the compounding effect of that money grows and balloons over time, right? How beautiful that would be if we all understood that in a way where we can become more financially free, in essence, to how to put our money to work for us in a more a controlled environment, meaning you're saving in essence to pay yourself later in life. Let me repeat that. You're saving now in essence so you can pay yourself later in life, so you can live a life of comfort and success, and you don't have to do all this kind of extra curricular things later in your life that a lot of people are having to go back to how the world has extended the retirement age. You don't have to do that when you have investments out there now, right? You got the Roth, you got the TSP. You got 401k. You may even have a drip fund out there. You may have some CDs out there. You may got some bonds out there. You got mutual funds going. You got equity stocks going. You may have again, a few forex plays here and there. You may have some regular, some Bitcoin crypto plays going. Again, you're constantly putting yourself in a position to what? To acquiesce money. To acquiesce, again, this fine, excuse me, this infinite value of money that's out there, a pool of money, right? And so again, backing that up to the point where we understand the global financial situation in terms of how much money is being moved around the world on a daily basis that we're not partaking in, it's enough to make you want to go out there and just bang your head against the wall. Like, how am I not taking advantage of this? Right? We're talking about 5.6 to 5.7 trillion dollars with a T is moved around the world globally through financial transactions. Majority of that is happening through the equity markets. From a business day perspective, let's say even from 9 to 5, we talk about 5.6, 5.7 trillion dollars being moved around the world globally in the free world trade market. And a lot of us are sitting on the job, twiddling our thumbs, shooting paper clips on Facebook, you know, sending pictures of you, whatever, again, just kind of, messing off all this valuable time, and have no clue that there's a no ceiling apparatus of money that you can acquire just by understanding how to read some charts, read some data, the stuff that I have on my screen right now, understanding what all this stuff means, taking your position, again, front loading, and then sitting in a trade, and or just, again, hitting your goal in one day. It could be a 3% goal. It could be a 10% goal. It could be whatever, with the right amount of knowledge and the right amount of things going in your favor behind the asset, what it has to offer. You can hit that in a matter of 2-3 hours. You can hit that in a matter of 10 minutes. Like, I've been in a trade where literally, I got in literally in about 20 seconds later, almost like $200-300 on a spike. Like, I can literally say I made $200 in like what they call some seconds. And people are like, man, you just embellishing. No, I'm telling you the truth, right? Because once you see this stuff for what it is, and witness it for yourself, you're like, man, where you been all my life? Like, how did you miss me all these years, right? Why haven't I been taking you serious when I had a point where I had all this extra cash when I was back in my younger days, just blowing money on everything under the sun that wasn't even worth buying to impress people that didn't even need to be impressed? I could have been putting you to work. And so by the time I hit in my 30s or got in my 40s, whatever, I'd have been sitting comfortably. I'd have been sitting pretty. But guess what? It's never too late. See, this is the reality where you don't have to get recertified to learn this. You don't have to have an MBA in finance and statistics, right? And banking and finance, things that need business management. Those things are, again, they're not even remotely exclusive to you being able to be proficient and profitable in the stock market. They help in terms of being able to kind of realize, data in terms of numbers from a numerical perspective, in terms of breaking down, the metrics from the fundamental perspective. But ultimately, they don't really help you until you realize the whole entire scheme of the play. Meaning, there's more than just the financiers of a project. Then there's the technical aspects of it. If you're doing a movie, it's the people who make the set. It's the actors who come in. It's the cameraman. It's the person that runs to get coffee, right? For all the people, it's the orchestra, so to speak. Everybody has to be on the same accord. And so you can't have one favorable trait in one aspect of that, and then again act as if the other aspects of it are not important. Now you can still be profitable in your endeavor to know what you know more above, all the other stuff. But imagine if you knew a little bit about everything to the tune where you can make a better educated decision. That's what this is all about. And again, it goes back to swing trading and front loading. This is why you want to be able to put yourself in that position so you don't have to fight the market from day to day perspective, right? Because you always hear people saying, man, I know a lot of people always losing money, man. They always lose money. A lot of times they're losing that kind of money because couple things. They guessing a lot and they chasing a lot, right? And actually three things, and their emotions are all out of whack, right? Because if you had signed due diligence, right, you wouldn't necessarily be, doing a whole lot of guessing. If your discipline were right, you wouldn't be doing a whole lot of chasing, right? And that's just the reality. And if your emotions are all out of whack, you will understand that your psychology is the best ingredient that you need to be a great trader. Let me repeat that. If your psychology is tight enough where you can keep your emotions in check, that in itself is one of the greatest ingredients you could ever have to be a profitable trader on any aspect of trading in the markets. I don't care if you're a real estate agent, if you're a NASCAR driver, if you're a quarterback, or a point of contention where you're always under a lot of pressure. You need to make sure you keep your psychology in check above all things, because that's what matters most, right? And so again, let's get to the chart real quick, right? Because I don't want to get too far off topic. I thank you guys for hanging out with your brother again, African Emporium, here on this wonderful Sunday, going through this training session, dealing with what? Swing trading and front load. So you guys can see the different aspects of how you can get to this money, right? Without having to put yourself through so much what? Adverse risk, right? You don't have to fight the market to prove anything to nobody, right? Because again, you're not in a competition with me. You're not in competition with your brother or sister that's in the bad chat right now. You're in competition. Guess what? The market makers, right? You're in competition with ARC, Bats, Edge, right? All these different market makers out there, pretty much the entire market, or the bankers, right? Because they control a lot of what? The price action of some of these stocks, because they have more money than the average retail trader. Not necessarily that we don't have victories too, because a lot of times the retail do overwhelm a stock, and then they take over even that with institutional holds, and we control a lot of the movement too. But ultimately, at the end of the day, again, you're there to get that money back from those institutions who are hoarding it from you through the different banks and financial services apparatus that are out there, platforms that are out there, who are who are amalgamating all these different funds through fees and taxations, right? Using the system at their benefit to gouge your worth value. So if you don't want to have to deal with a 40-hour work week, making $30 an hour, not getting no overtime, and then the next year roll around and these people not going to give you a raise, right? You work entire 365 days out the year, based, from a calendar perspective, a fiscal year, and you didn't get a raise. You banked on that, that 25-cent raise, or that 5-cent raise, or that 10%, 10-cent raise, and they say, well, no, we're going through a shortage right now. We got to cut back because tariffs are kicking out behind right now. Tariffs are eating into our profit margin, so we don't have any extra to really pay our workers right now. So I'm sorry, we're not going to be able to give you the raise. And you already start counting that money in your head. You already start making purchases with that money. And now all of a sudden you got, the biggest, letdown in your life. We can't give you the raise right now. Like man, you bubbling and and rage right now because you needed that money. And on top of that, the cost of living goes up every year. Ever so incrementally, the cost of living goes up every year. So meaning if you don't get a raise year over year in some aspects and you stay stagnant in the wage growth value or the wage value that you're in, you actually in the hole the previous year. The following year, you actually in the hole. A lot of us don't think about it that way. So that means you're gonna cut back on your spending at some degree if you're gonna balance out your budget and your money all the way to the T where it matters that you know where your money is going, which we should be doing anyway in a lot of ways. Because why would you trust that kind of power in the hands of people that you don't even know, and then when you can do it yourself? It just makes no sense to me. So again, when you hear people say, "Man, I got like 30, 40,000 in the bank, I don't know what to do with it." When I hear people say something like that, man, I be want to throw up. I'm like, "What? Wait, what?" I mean, I have people come to me actually say that. And no disrespect to them. They're like, "Man, I've been wanting to get invested. I didn't know what to do." And they only have their money in the money market account. Meaning it's not even accruing no kind of interest through the value of you allowing the banks to have your money resting in their institution, and they ain't even your interest on top of it. Like that's the most backwards hustling thing I could ever hear. Now that I know a lot more than I thought I did, at a point where it really the light bulb went off. Like that's like backwards hustling. But yet we trust these people because again the FDIC, they FDIC insured, or they under FINRA, FINRA, they under all these different branches of government or oversight where at least they can't just do away with rob me and rip me off. But in the day, they are robbing and ripping you off through exorbitant fees and taxation, and they're not necessarily give you nothing in return for you to have your money parked in their bank. I don't care about a nice little checkbook with Mike Vick on the front of it. I don't know. I don't want that. I need my money to sit in your bank to go and grow other, aspects of money so it can come back, with some new friends, so to speak. Right. And so again, that's why I keep harping on the idea that, you know, just from my perspective, again, from my perspective, there's no there's no industry value out there that can give you the level of opportunity to increase your per capita, your net worth, than that of utilizing the U.S. stock market, fully incompetent. What I'm saying, not just guessing, but fully incompetent to your ability, year over year, from a level of growth. It's nothing that's out there that's better than that, because we're talking about, again, compounding interest. Where if you just did nothing but just open up a stash account and put $5 in it every single day out of 365 trading days, 365 days out the year, and at the end of the year, that alone will yield you about $1,875, right? $1,875 from just putting in $5 a day. Discipline saving, so to speak. Principal investing, so to speak. Now, take that same opportunity and being able to put away $1,800 in 1 year just by putting away $5 a day, because you will take $5 and blow it on a $5 fill-up box at Kentucky Fried Chicken and get all kind of stomach aches and all, and then you got to turn around and go buy some Rolaids or some stomach medicine to calm your stomach. So you went in under. That wasn't even a good investment when you bought that chicken box. Right? No disrespect when you eat chicken, right? The chickens matter, right? Right? Whatever. But it wasn't a good investment when you thought about it at the end of the day, because now you got heartburn. Right? Now you're on, again, I don't want to gross you out. Now you sit on the toilet, more than you need to. Right? Because you went to Taco Bell and got that, that horse meat. No disrespect, I ain't talking trash. I ain't talking trash for my Taco Bell eaters out there. Y'all, I'm cutting up a little bit, but we having fun, right? Have fun, make money. So again, it turned out to be not necessarily a wise investment at that moment. So if you say, well, okay, I was gonna blow that anyway on something, silly, stopping at the 7-Eleven or whatever, the bodega or whatever, right? The canteen, wherever you may be, I'm gonna put that money into, a growth apparatus. So in essence, if I say that $5 and put in the stock market or in my stash account, and that's the stock market, if you buy a stock with it, whatever, fractional stock with it, and over time it keeps accumulating, again, out of a 365-day perspective. And on top of that, the stocks that you bought, or the collection of stocks that you bought, even through an ETF value, end up producing you about a 5% gain a 2.5% gain, a 10% gain, a 15% gain, a 20% gain in an annual perspective. Oh, so my money went out there attracting new money then. Oh, this is what this brother been talking about. This is what, all the people that's been speaking about getting in the stock market been talking about. And I had it to give because I typically blow that on trivia stuff every single day. On things who have that really don't really have a necessity value in my life. I just bought it because I knew I could. But yet still through my disciplinary value, I turned that into something great. So you're talking about again 20% on 1875. Somebody throw that math in the back chat. What's 20% of 1875? Right? From the mathematicians out there, some of you guys do that math in y'all head. Y'all sharp like that, right? What's 20% of 1875? Somebody throw that in the back chat. While I'm still building here real quick, I'm finna show this Bitcoin chart here in terms of consolidation accumulation, right? So y'all can see what that number is, and you can do it on your own or whatever. But either way, we talk about compounding interest, dollar cost averaging, principal-based investing. $5 a day is the principal, and the interest, the same way they hit you in terms when you buy your house or your car, when they hit you with all that doggone appreciating interest, right? On top of that, the interest is another, APR, 7%, 15%, 18%, 12% on top of, the base price that they're already going to hit you for. All right, if you're financing. So now you get to flip the script and look at it from a place where you're actually financing your future in terms of a ROI as opposed to a liability. Let me repeat that. You're actually now financing your future in an aspect of an ROI as opposed to it being a liability. A 30-year fixed note, right? A 6-year, fixed note value on your vehicle purchase, or a 3-year, fixed note on your vehicle purchase, right? Because now under the new credit act realities in terms of how these financial years are going about lending money out, they flipped it now from back in the what it was back in the 90s, where you actually can pay on the principal first and pay the interest off later. You can't even do that no more these days. They got it set up now. You got to start paying on your interest first. So in the event that you default, they ain't gonna be stuck holding the bag, right? As crazy as that sound, it's funny how when the banks were lending people all this kind of radical money, or this to go out and purchase these homes that these people ended up defaulting on under the housing bubble crisis, right? They were doing it really under the mindset that these people were going to default. They weren't doing it from the aspect of really going out the way to do something good for you so you could benefit so-called, the greater aspects of life and life pursuit of liberty and happiness and to own a home. No, these people were doing it in essence to think that you was going to default on it because they get paid almost another 20%, one-third of percent value in extra interest when you default. Their goal is to make money off the interest, not necessarily see you happy in your home. Don't get it twisted. I mean, some of you guys in touch, y'all get it. Y'all, we financial literate people here. We learning every day. We growing. We building. But ultimately, they're trying to play on your psyche as if they're doing you a favor. And in actuality, you actually doing them a favor. So it's a psychological change where you got to start realizing your money is more important to you putting it in in what they call liquid environments than it is, putting it in place in a dead pool reality in terms of just sitting in the bank and not doing nothing with it. Or putting it in a coffee can and burying it in the backyard and doing nothing with it. That money ain't accruing no interest. Anything is get some mold and that's about it. Right? You got earthworms digging in through your little coffee can, whatever. And hope the rats don't get to it, right? Hope the rats don't chew up by the good, 20,000 of it because you done put it in the attic and didn't even, wrap it up properly in aluminum foil and put something else around. Now the rats chewing up all your little, your little savings money. You can't take, 1,000 pieces of a bag to the bank and say, hey, it's 20,000. You just got to put together like a puzzle. And people gonna show you the dough fast. Then you can that same way. Y'all already know it. So again, let's get back to the chart real quick. Again, I don't want to keep you guys long. I appreciate you guys hanging out with me this far. I'm enjoying this because I understand the power of bringing people to the reality to realize that everything they need to be successful in life is right before their very eyes. It's right before your very eyes. You have what you need. A lot of the time, we don't have the right people to help us unpack it. We don't have the right people who have our best interests in mind to give us that leeway without them having to charge us thousands of dollars. Again, the educational system in America, the most, lucrative rip-off value that a person could ever endeavor. And there are some specialty jobs that require you have to be educated. I get it, but for the most part, if they got things in their on their program list that has to deal with like Western music, things of that nature, man, that's a bunch of trash. You finna pay 80,000, 100,000 plus for Western music. Get out of here. And your child running home at semester saying, "Hey, ma, I changed my major from engineering to Western music." Wait, what? You did what? You gonna burn down the house? You did what? I ain't even pay no 100,000 for you to learn some silly behind Western music or some Bach or Beethoven. You better get out of here. But all I'm saying is, why go into debt just to try to find yourself a way to get out of that debt, just to end up compounding more debt through the value of the interest that they're gonna slap on top of you, when you could bypass all that if you get serious about life in the aspect of learning how to be autodidactic when it comes to information, to be the entrepreneur that you was born to be. Everybody's born with an entrepreneur gene. Whether you access it and accessorize it, that's up to you. But everybody's born with a natural entrepreneur gene. How to sell something, how to make themselves presentable, how to acquiesce things without necessarily having to exert so much force to be able to get that, right? That in itself is a science, if you ask me. But ultimately, if you never learn how to position yourself and posit toward those kind of realities, then you'll always feel like you have to work for somebody else. You always feel like you never don't have enough. You always feel like you're trapped into this, man, woe with me reality where, man, the world just treating you all kind of ways, and all you gotta do is say, well, hey, let me just stand up here, realize my power, and let me see what's out there that gives me that presents to me the least path of resistance to get to the bag, and then let me go endeavor in that. It's like anything. You do your little check down list. As I'll give some of you guys that might have been, previous military like myself. We do what we call a PMCS check, preventive maintenance checks and services check. Preventive maintenance checks and services. Let that marinate. Preventive maintenance checks and service. Do your check down. Do your deductive reasoning. Right. Old school. Go back to literature. Back in old school and grammar. Do an outline. Draw your circle in the middle. Draw your little stems and root stems from that, and start branching off from there, and get to that point where you feel like, okay, I got a good enough scatter plot here to kind of give me the best position to put myself in to get to where I need to go a lot faster now than having to just feel like I'm going at this thing naked. And basically, all that really means is get your due diligence together. The same way people say, get your ish together. Well, I'm going to say this to y'all. I got a t-shirt moment. Y'all know I like to throw out these t-shirt moments, right? I'm big for just throwing out slogans and terminology that should go on a t-shirt because it matters. You need to wear what you own or wear what you believe in, right? Own it. Own that thing, so to speak, right? Right? You need to get your due diligence together, right? Get your due diligence together. If you learn how to get your due diligence together, I guarantee things become a lot more pliable to you in the long run. And they don't have to happen all overnight. Realize it's a marathon, not a sprint. And some of us probably feel like we got to, go a little harder because we kind of waste a little bit of time in the beginning, but that's all right. If you invested in what I'm showing you guys right now, not necessarily crypto, but just the aspect of utilizing the global markets at your disposal properly, I guarantee you can catch up a lot faster. You can make back those 5 years. You can make back those 10 years. You can make back those 15 years in a heck of a lot faster time it took you to go under. I guarantee it. Because the ultimate rule is if you just set it and forget it for some of these value-based stocks, like again, let's go back to Apple. Right? Apple was trading at what, 50 something, 30 something cents a share back in the early 90s, somewhere around there, early 90s, 80s, somewhere around there. 50 or 30 cents a share. Some of you guys probably weren't even born then. Some of you guys may have been born in that time. Just imagine for your first birthday, right? Your mother and your father and your family put together, and they bought you basically $100 worth of Apple shares at 20, 30 cents a share. Fast forward to you hitting 18, 20 years old, and 30 something years old, and now the shares of Apple are trading at roughly about $200 a share, and they bought you 100 shares at 32 cents a share. Y'all do the math and markup on that. Now here's what's going to really get interesting with that statement. I'm not saying that you guys really don't already know in the back of your heads. Anyway, now here's something that's going to really cook your noodle. Get serious about your kids' future in a way where whether you have some or you don't have some, start planning for them right now. Start doing that right now. Before they even get here, you got it. You would have blew $5 again at 7-Eleven. at the Quick Mart, right? At the Quick Trip, right? At Sheets or the Chevron. You'd have blew that today if you went outside your house, just because everything outside your house is geared at marketing and getting money out your wallet every single day when you crank your car or you walk down the street. It's a dog eat dog marketing world out there where everybody wants what's in your pocket. If you leave your house, don't get it twisted. Right? I did international marketing for a good little while. I know what I'm talking about. I know the numbers, right? We deal in the law of averages. I understand the ability, what it's all about in terms of how, it's a constant breathing machine when it comes to sales, right? That's why America lost all its manufacturing job and they moved to a more sales-based economy. They deal more in services than they actually do in producing products and goods and services. Hence, that's why they're crying out because China is controlling that whole reality. And now they got to sit at the table of the Chinese and go through this whole tariff, reality, even though Trump brought it on himself. But he thought he was doing something good to try to up the ante and change the game. That's going to, bring money back. But he needed something to kind of, obviously fill in the deficit that he's running up, the national debt. Again, this is not a political conversation, whether I'm neither Republican or Democrat, none of that stuff. I don't follow that. I follow it, but I'm not a part of it. I understand my position is more relegated upon the resource that I can produce for myself. That in itself negates any political slander, any kind of political policy out there that'll put my life at risk and jeopardy. Because if I have enough resources where I can live comfortably, they can institute any policy they want and I can still function and flourish. Know why? Because I have the power to move around and do things in a way where I'm not stricken by a dollar, day-to-day dollar scrape reality. And that's the power of financial freedom. So the goal is that we're working hard. All of us who's paying attention right now, that's listening to this live stream, we're working hard to work ourselves into that kind of reality. It can happen in a year. It can happen in 5 years. It can happen in 10 years. Give yourself enough time to realize the power that you have in utilizing the global financial markets. That's what this is all about. Because before you got into it and you had no clue about what it really takes to be able to do this, because you thought it was all complicated and you had to be some kind of big Wall Street buff or guru, and you realize, oh, this all these people do? Man, why I ain't been doing this? Now it's like, man, I wasted all that time. I wasted all that money in the club. I wasted all that money on Hennessy and whatever y'all guys were drinking. Y'all drank back in the day, still probably drink Cavassier, whatever. Whatever y'all, you like, man, I could have saved that $120 I spent at the club and put that into, doggone KPTI, 3-4 days ago. Stock went from $5 a share all the way up to like $10. It doubled in a matter of a day and a half. A day and a half, you doubled your money. So if you put in $120, basically, the day when it was trading at $5 a share, I think it was like Tuesday, Wednesday, whatever. Come Friday, it went up and hit like $10 a share. So basically 2 or 3 days, you doubled your money. So now you got $240 when you started with 120. Guess what? Now you can treat yourself to the club because guess what? You spent nothing for it. Hello. People are like, well, how's that even feasible? It's very feasible once you learn how to position yourself properly and make the proper steps to let the market fund and fuel and pay your way through this lifespan. Because one thing about the stock market, it ain't going nowhere. It's not going nowhere, right? A job can shut down tomorrow because the margins and the taxation of the tariffs and everything that's hitting them so hard where they can't even pay you a raise. They may shut down, start letting people go. That's what happened anyway, right? GM, 14-some thousand workers. Ford, 7,000. Verizon, 7,000 some workers. The list is endless. People just keep laying people off left and right lately. These people consolidating their job numbers to deal with all this kind of unnecessary overhead that's coming on the back of this trade war. And all it really means is that the corporate governance or the board of directors are greedy and they don't want to take the time to really reconfigure their numbers to make sure they can accommodate all this different, new influx of taxation, right? Because they can't get their pension bonuses and different, incentive bonuses. And so instead of losing that, they'd rather cut the workforce down and deal with the idea of having a low output value of work that they can put forth and go and weather that storm than to pay somebody a decent livable wage, work through it, take a pay cut, give back at least $1 million that they would have got on top of the $5 million. They so greedy to even do that, they'd rather let the business go under and fire you than not to be able to live a very greedy lifestyle. That's just the facts. That's just the facts, guys. So ask yourself, why are you working twice as hard to receive twice as less on these jobs and not exploring different ways to get other streams of income? I'll wait. Why are you working twice as hard to receive twice as less on these jobs that can give a darn about you and fire you tomorrow if they could, replace you with somebody they pay a lot less, and you thinking you got job security, or you all with your little chest poked out. Well, I got a college degree in this, and oh, I'm worth this much, and the economy and the jobs looking at you like, okay, and get in line. I can pay somebody a lot less, and they ain't gonna deal with all this kind of ego that you got, and I could be just as profitable without your little education in my industry or my job setting. But this is the delusion, the grandeur that we have been fed all through high school into higher learning education. As if you the breadwinner, if you can go out and acquire all this debt through learning education as some kind of rites of passage to prove that you're able to go out here and work these different program values of jobs to the to its maximum potential, and then they'll pay you a little money on top of it to make you feel like you're in a certain tax bracket or class value to make you feel like you actually live in the American dream. When you have no understanding of how to really get to the bag under the real aspect of the American dream, it's through investments, guys. Don't get it twisted. It's through investments, guys. This was not a takeover under the auspices of what they call happiness, land, pursuit of happiness, and what they call what's the little saying go? Pursuit of happiness and freedom, whatever it was. No, it was the pursuit of land. These people came here in pursuit of land, not happiness, but land, right? And so that's the whole reality of things, right? To control resources, so to speak. Well, technically, your money is a form of a resource. Whether you want to acknowledge that or you don't, it's a form of a resource. So getting back on topic here, even though that was a very good soundbite, we need to kind of speak about that because a lot of people fail to realize those little things. They'll overlook it sometimes because we get too busy caught up in the rat race. We'll overlook those important key things in life that's very important, and we'll realize, we fail to realize this is how we're trying to position ourselves to become, profitable. How we're trying to get ahead of life. How we're trying to really obtain financial freedom. It's through investments, investing in yourself first and foremost with the knowledge, and then investing into these different aspects of different platforms, different opportunities out there that'll give you the ability to get to where you need to go a lot faster than if you was to work 20, 30 years of your life. Again, so let's go to Bitcoin here. Again, let's talk about accumulation, consolidation, front loading, right? Swing trading, and seeing how that works out in terms of long-term time horizon, from a week to a month to a quarterly aspect of a fiscal to a biannual perspective, and also to an entire one fiscal year block of investing, right? So let's go back to Bitcoin. But again, I was in Bitcoin way back here. Y'all see my lines here? All these lines been here for a long time, right? Y'all know I've been talking about this stuff on the Dagger Squad for a long time, right? When I first got with them, I was like, hey, y'all might want to look into this. Here's my thesis on it. Here's my information on this. Here's my data points, right? At that time, Bitcoin was trading about $1,900 a token or Satoshi, right? Up to 1,800 to about 2,000, and that's when I was really, getting a lot of people, excited, obviously letting them know about it. So I got in way around this point here, right here, when I was telling people about it, like Litecoin, whatever. It's right about 1,900 some change, right? You see a little wick right here. I was up in that region there, right? Added to it a little bit here along the way, whatever the case. Now, granted, had I really knew what I really, I moved my doggone bar. I don't know where it was. It was probably I took it out again. But either way, if I really knew what this thing was going to really do at that point when I was still learning this asset class, man, it'd have been great just to say, well, hey, going all in on this, right? But either way, it was still a great in terms of a mental investment and also a physical investment that turned out to be very lucrative in that perspective. Because again, knowledge is power. Knowledge leads to what? To the bag. And so this is all about learning how to get to the bag, right? So you think about this here, right? Front loading, right? Testing the 200-day moving average here, got back above it. I actually didn't even go in. Got bounced near pivot and went back higher. Right, game was over. Right, it took off basically. So Bitcoin went from at that point when we was getting everybody excited about it and getting people started buying into around about 2,000 a coin basically, all the way up to like 19,000 to 20,000. Right, so we all witnessed that and it was like, oh man, this is like crazy. And they did that in a period of about 6 months. 6 months, guys. So basically, $2,000 turned into 18,000, or excuse me, like 17,000 to be exact. So you turned 2,000 into 17,000 in a matter of about 6 months. So from June all the way to basically December the 18th, December 17th. Basically, we're talking about roughly about 6 months. You turn 2,000 into 17 grand. Let that marinate. How many of you guys that maybe wasn't invested in Bitcoin back that time, even before that? Because again, I know people who was in it way back in the triple digits, right? Triple digits area, right? They was in around the 200 range, $300 range, whatever, whatever, and they wrote it all the way up to this point. So they don't get it twisted, right? But how many of you guys back doing that back in 2017 had $100 to spare, $200 to spare, $50 to spare, right? $2,000 to spare at a point of understanding the asset class, reading over it, doing your research on the due diligence, and saying, "Hey, this is a long-term investment. This is a set it and forget it. This is an extended swing trade. This is a front-loading position here." Because at the end of the day, I can always cut my loss if the stock goes against me, and I take a small loss, if anything. But I'm still putting myself in a position to reap the benefits of this new asset class that seems to be taking off. Because again, the one thing that made you attracted to want to buy that up, even at that point, was to going back and look at the previous chart history. See, that's one thing I love about investing. It gives you a blueprint of what, or a performance record, so to speak, of what this asset class was doing prior to you getting into it. So it has what, a very, very profound premise, and a very, very detailed thesis to why you should possibly think about what, investing in this asset, because it has a what, a record of performance that you can go back and what, check over. So you saying, well, hey, okay, well 2016, shucks, bro, 2016 it was trading at $500 a token, $600 a token. Wow. You know, we're talking about 2016 here, guys. It's 2016 alone. You're talking about, $400 a token. How many of you guys had $400 laying around back in 2016, right? Out of an entire fiscal year, that you had an extra $400 laying around, that if you really knew what you knew now, that you could put up, probably invested in the Bitcoin at that time, and then set it and forget it kind of trade. Even put it into an account that you probably even forgot the password, forgot you even had that account, just walked away from it and didn't think about it twice. How many guys probably had that kind of reality back during 2016? I know I did. I'm pretty sure a lot of you guys did too. All you had to do is buy one Satoshi, one token, at $400, and let's say $40 a token. Set it and forget it, front load, swing trade, whatever, walk away. And guess what? The past is a great predictor of the future, right? So here's why you would have got covered even to buy at that $400 level and not think that you was buying in too high. Because guess what? Again, looking at the past a little bit, what does the past tell you? Heck, it was a lot lower in 2015. It was trading at $215 a token. Excuse me, $230 a token. Wow. And it doubled basically in 1 year. That's a good return. That's a good ROI, or a good ROE, return on equity value, return on your investment. That's a pretty good investment. So you doubled your $200, $220, $230 from 2015 into 2016, roughly. Again, if you go back and look at the chart here, we're talking about roughly in a 1 year or 52-week chart history time span. So basically from May of 2015 to May of 2016, you doubled your money. So from around 230 to 450, you doubled your money in 1 year's time, literally about 365 days to the T. The past is a great predictor of the future, because we have a what? A backlog, a study guide, a performance report that we can go back and relegate this stuff to be what? Valuable, valid. See, this is the great thing I love about the stock market, right? Or investing period, because you have a lot of different data points and reference points that you can go back and check. See, when it comes to this, you can't sell nobody the stock market. See, people can't call you crazy, or whatever, that you selling them something when it comes to this, because I don't own the stock market. See, this is one of these apparatuses where if people really knew the gravity of it, they'll be more inclined to want to study it and learn it, to be, to utilize it, because ain't nobody in between trying to take something from you that you can't manage yourself. You don't need a banker. You don't need a person on the block to show you how to hit the buy and sell button. You see where I'm going with this, guys? You become your own independent operator. You become your own, pretty much, you know, you running your own business, so to speak, online business. Y'all know my motto is best online business investor. Excuse me, best online business ever, investor trader. Those are my talking points, right? I say that a lot. So everybody, best online business ever, investor trader. Prove me wrong. What's your overhead? Right? Just the other day, my sister Mo and the Dagger Squad was going over the overhead, what it takes to run a business, right? All the different things you had to pay for: insurance, filing fees, and phone, internet, power, healthcare, all the different things it takes to run a business, right? The employing people with, right? Think about investor trader. What's your overhead? Some PDL, some books, right? You can get a lot of stuff on free online if you know what you're looking for. So what's really your overhead? Knowledge, some initial capital to put down to get you in the game, a trading apparatus to trade through, tablet, phone, internet, PC, whatever, right? And then a broadband or internet connection. 4 things. 4 things, guys. And you can do this anywhere around the world, as long as you have those 4 things in play. Let that marinate. You're not landlocked to a brick and mortar. You're not landlocked to a certain situation where they don't want you outside of a certain demographic to be able to perform. You can do this anywhere around the world, as long as you have at least 4 of those things in play, and be just as profitable in any time zone. You got to get up with the right time zone, obviously, if you're trading the equity markets in terms of, U.S. stock markets. But outside of that, crypto trade around the clock, 24/7, 24/7. People making money hand over fist, 24/7. And I guarantee you, right now, somebody's out blowing $300-400 on a pair of Nikes. Right? Again, that's a prerogative. Nothing wrong. Do what you want to do. Live your life to the fullest. But guess what? If you learn how to make Nike pay for them shoes for you, I bet you'll change. You'll flip the script so fast. Oh, Nike finna pay for these shoes. What do you mean by that? Nike stock, hey, I might even go buy invest in Armor stock. Just take the money from that and you go buy my Nikes with. Ain't no rhyme or reason. You're not relegated to own to be loyal to any one of these stocks. All these stocks are pump and dumps to me. Every last one of them. Apple is a pump and dump. Google is a pump and dump stock. Amazon's a pump and dump stock. So if one of those is one of your favorite companies, I'm sorry to tell you, it's still a pump and dump. Because one thing we understand as a trader, investor, or as a person who realizes the power of putting your money to work and you doing them a favor, not them doing you a favor, is that guess what? Here today, going tomorrow. We rent and lease and not own. I can own a stock for up to 20 years and still have it in the mindset like I'm renting and leasing it. I'm never going to get emotionally attached to none of these companies because guess what? All of them are fugazi. I'm going to tell you why. Because imagine your best friend that works for one of these companies that get laid off because that board of directors don't have enough incentive, to the degree where they don't want to let their pension or their incentive bonus get cut because the margins are getting a little bit tighter now because of tariff, and as opposed to reconfiguring their books to keep you employed and them taking a haircut. They don't want to take a haircut, so they'd rather fire you and let you go while you're thinking that, oh, this is the best company ever, and now you're on the streets. You see what I'm saying? These companies don't care nothing about you. Start twisting the reality of things and realize that, hey, here today, gone tomorrow. Look at Kmart. I mean, a lot of these stores, they consolidate. Look what happened to Toys R Us. Toys R Us trying to make a comeback now, but Toys R Us went out of business. Who would have thought a brick and mortar toy company, or excuse me, not a toy company, but a toy store, where all these kids on the planet, right, would go out of business or go bankrupt? The most premier toy store in terms of a depot value where people can come in and shop went bankrupt and went out of business. Of all businesses, a toy store where kids rule the world in terms of they always want everything. Second to that, a woman, right? Because kids first, women second, right? So who would have ever thought that? And everybody know at the top of their head when name me most a very profitable or a very well-known toy store. Most things are gonna roll off people's mind or tongue is gonna be what? Toys R Us. And then when Toys R Us went out of business. Like, how'd that happen? Well, who put them out of business? That's when it becomes an aha moment. What made Toys R Us go out of business? Somebody else must have been better, cheaper, whatever, right? Now you're starting to research. Well, what caused them to go out of business? Man, I looked up the traffic, through this website thing and figured out that a lot of people are starting to go online and buy toys now. Well, why would they do that and not just go in the store and have the shop? Because it's easier and it's cheaper. Well, who's the person got this online, machine that's sucking up all the toys of his business? Now you're starting to research naturally, natural observation, before you even start really Googling, doing some real work. Oh, Amazon. What's this Amazon stuff all about? Oh, man, they got everything. Wow. And there you go. So now you in a natural observation, before you even did some real study, due diligence digging, from a natural observation, you was able to deduce that the value that Toys R Us lost a lot of their natural business, a foot traffic business, to an online, juggernaut machine, and that of Amazon. It saved people time, gas, all these other headaches. Dealing with putting kids in cars, just drive them down to the local Toys R Us so they can play with half of the toys and they only come out there with maybe one. All that, again, you can never probably change the experience that you get from doing that. I get granted, but people minds have become so, man, people minds today has become so relegated to that of a 10-second commercial that it ain't crazy anymore. People are impatient, basically what I'm saying. People don't have the patience anymore. They want it now, and they want it fast, and they want it furious, right? And so because of that, people miss out on a lot of the natural things in life because they'd rather go the cheap route in terms of their mind, which they figure to be cheap, right? Because it's cheaper in person, but they really missing the experience. Now, I'm not saying we think about that from the aspect of investor trader, but I'm just relegating the idea of what people are missing now when you move away from these brick and mortar, these places where you have to go to places to kind of enjoy the experience, where you can easily get it online. Again, it makes sense from a natural thesis that what save time and money, right? Because that's what it's all about. But ultimately, you got to have a healthy balance, right? But as an investor trader, we say, hey, the ultimate goal is always what, to buy low, sell high, no matter what it is, no matter who the company is, because we can care less, because we're renting and we're leasing, right? And that's the whole ability why we look to front load stocks, why we look to swing trade stocks a lot more than thinking about, okay, well, yeah, I know I can day trade. I know I can Momo trade it, momentum trade it. But let me lessen that effect value a little bit. Let me start thinking about maybe buying an options contract in the stock as opposed to buying 100 shares outright and putting that much exposure of my money out there like that. And I could just get it for a lot cheaper. Let's say if I bought 100 shares of Apple and the contract only cost me like 70 cents for a weekly move, about $5 or $6. But that's a lot cheaper than having to pay 100 buy 100 shares at a $200 ticket price and having to spend what, you see what I'm saying? You see where I'm going with this? To spend $20,000, right? All that exposure of $20,000 being out there, in the market when you could only have spent 70 cents, which is equivalent to $70 for them same 100 shares, and you just need to start to move $5 or 5 points within a certain strike price, strike zone value in terms of a calendar aspect. There's so many ways you can make money in this market, guys. So many. I know I'm preaching to the choir for some of you guys, but a lot of our family don't hear learning, and they're trying to get to that point. And so that's why I always come from a basic perspective when I kind of do my little training or workshops or whatever. I like to break it down in layman terms to make it make sense to you guys, right? There's too many other complicated things in life that we have to deal with on a daily basis anyway. Investing in trading should not be one of them, in a way where we put all this anxiety and stress on ourselves and take away the fun aspects of making money without having to work so hard for it. You should do that, and that's basically what happens when you go to work every day. You got to deal with, people at the coffee machine or at the water cooler or at the snack machine, whatever. And here they go. You already got lot of stuff going on. Here they go from the trying to dump their problems and their issues on you. Nothing again, be human, help people when they need to be helped, mentally, whatever, physically in some cases. But ultimately, you know, that's enough. Like, man, I got myself to deal with too today, Fred. Not today, Fred. Not, what I'm saying, not today, family. Right? And so again, when you have the freedom to do things on your own time or recognizance value, that lessens the stress load so much more. It lessens it so much more. And one thing people always like to say, and it kind of twisted. It's twisted in a lot of ways because they're saying that from a place of not necessarily understanding the power of resources. When people say the money is the root of all evil, I would say the sin is not having enough. When people say the root money is the root of all evil, I would say it's a sin to not have enough to live your life comfortably. meaning you're not working smart enough to be able to put yourself in the mind to have the natural the amount of natural resources to be able to function, function and live properly, and not feel like you have to be without so much. So apparently, you're not doing something right to be able to acquire or acquire these things, so you can be what living a more comfortable life. Now we all on that journey together. Granted, for those who realize this power in investments through land, through if you running a business, running your own business. Again, and it may seem like it's hard times right now. People don't really understand your mission, what you're trying to accomplish by your business through your products and your services, and that's okay. I'm here to tell you, you're doing a heck of a lot better than most majority of people who out there who going out there working for somebody else and thinking they got job security. It goes back to that old, a meme that I put out on Facebook a while back. I've seen other people put one out there too, alike to the same reality, right? I had this picture of Kermit the Frog, right? And in the meme it says, "I got the job," right? 1,000 likes, right? 1,000 likes and love. Oh man, you the best, man. That's awesome. You go, girl. And right underneath that, I put, I started my own business. 13 likes. Somebody saying, "Man, good luck with that, man. I hope you be successful." Hey, good luck, man. You sure that's a good idea that you did that? Why do people think that way? Think about the psychology of people who think that way. Then ask yourself 20, 30 years from now, with those people, are they the kind of people that you would want to, be around you because they're more, skittish when it comes to making educated decisions based upon proper analysis and due diligence. So they pretty much talk themselves out of opportunity every day was basically what I'm getting at. So they're more comfortable thinking that their success is going to be relegated against somebody else telling them when they could be successful. Hence, that's why they go get jobs, one after the other. And so again, that's backwards hustling. But because they've never been taught properly how to find multiple ways to get to the bag. So again, swing trading, right here, swing trade, right? Right here, swing trade, right? Following year, swing trade. Look at the incline, guys. Look at the incline. Look how it keeps going up. Look at the 200-day moving average right here. Just to let you know, this yellow line here, this is the 200-day moving average. Look how it's been inclining over the years. Incline. If I go back further, it's going to be the same thing. It's going lower and lower. It's going to go higher and higher. So because Bitcoin only been out since 2009, right? Look here. Look at the yellow. Just follow the yellow brick road, right? That's even best. That's why I got this thing yellow for a reason, right? Y'all know I like to use a lot of different analogies for a reason, but that's a great visual indicator for me. I think about like the yellow brick road, right, on Wizard of Oz. Follow the yellow brick road. Look at that yellow line. Look how that thing keep increasing. Look how I keep going higher. This one it just went crazy. That's when it went real crazy. Went up there near 20,000. Right? Follow the yellow brick road. All right. Then the yellow brick road got a chance to what? Cool off because it was just going up, up, and up, always from like $100 a token, all the way up to 19,000. Right? Then it began to cool off. Right? Then it went through what? A cool off period. So I cooled off right here. Look at the RSI. See right here? All this RSI cooling off right here. It went from being way up here to down here now, to around this area here. We're about 30 or something on the RSI. And then in come the consolidation. In come the consolidation. In come the front loading again. It hit a point and pivot, right? It hit a point of support on the bottom where people say, hey, this must be the bottom. Look at my lines, guys. You see I got that thick line right here? You see I got the little small, little skinny line right here? Let me see if I can blow this up so you guys can see. I've been charting it. Y'all know me. I'm a, it's method of my madness. See the little skinny line right here, guys? And not necessarily the thick line right here. The skinny. This one I was buying again in crypto. This one I was telling people who's been following me during this time span that went through my initial when we had our workshop through the Dagger Squad. When I was telling people, hey, crypto looking good here around 3,200. I was telling people like over Chris, over Sunline, some of the guys that's in the back chat right now overseas, some of the guys maybe at that time that can remember right here, Bitcoin looks attractive here, 3,200. I think we reached the bottom here. Right, all my lines, is, my calculations here prove to be right. Because guess what? We got to bounce literally around the end of December 2018. And we got up here and hit a level of resistance and tested this 4,200 level, pull back, couldn't break through it, and now we went through a consolidation phase. See this line right here? I drew this line way back. This line here was drawn way back. Probably I think around the I think I drew this line maybe back in, man, I want to say I drew this line back in December. This little curvature line here. See right here, I got this little forecast here. Predictive forecast. I said we either gonna break out here from this breakout here, consolidation, resistance point. We go either gonna go chop sideways some more, or we gonna break down and come back close to this what? This support level around 3,200. What ended up happening? What ended up happening? This middle line, it went sideways, accumulated some more, consolidated, which offered some great front loading and swing trading opportunities for people that thinking long term, right? Even sometimes they're thinking short term, long term, right? So you got a move where the stock was there hit 3,300, gapped up, obviously, on some nice volume, went up like 3,600. So it picked up roughly about $200 in a matter of what? A couple of days. $200 a token in a matter of a couple of days. So imagine if you just bought one little Bitcoin at $3,300. You picked up $200 based on that investment in about 2 days or a day. And that's when it broke out above that support point right here. And hence I got that line right here. And it gapped up and went, whatever. I know it's hindsight 2020. You can always say that what happened now. But again, that's why you constantly keep working on your skill set to realize what you're looking at when you're seeing things happen in real time. So you won't be fooled or guessing your way through this. We know that this to be a trend value of what? Consolidation and accumulation. Hence, the bars got tighter and tighter. If I had the Bollinger Band indicated up right now, you'll see that the Bollinger Bands will be tightening down in this range here, meaning it's getting ready to pop it in the morning like a pressure cooker, because it's been what? Consolidating for a long time, building up pressure. If you don't believe me, look at the volume down here, guys. What is it right here? Look at this volume look like, right? It's like it's consolidating in a certain volume level at the same time. All this stuff is just pressure building. Pressure building. And at this point, you see more red candles here. Then over here, you see more green candles. That means you start to uptrend something. That means that you had less sellers. That means something big is getting ready to happen, right? Because the consolidation is getting tighter and tighter. Now you have what? Pressure cooker moment. Look at the volume. Look at these two volume candles right here, right? The volume bar, excuse me. Pressure cooker moment. Bow. It popped. 4,200, basically around 4,200. Everybody waiting to break 4,200, 4,100. And it popped all the way up here to like 5,300. So basically, in that one move, literally in one day, you picked up roughly about $1,200 a token in a 1 day move. Show me anywhere else you can make that kind of money investing in any kind of different aspect out there, even if it's through real estate. Because real estate takes you more than a day to close a deal. Y'all already know it. Let's not even play the game. You make some money in the real estate game too. I love it too. But we talk about where you don't have to deal with no middleman, no paperwork, none of this, lawyers and people coming out checking the property surveyors and all the kind of stuff you got to go through when it comes to buying a home in terms of that investment. And you just did this from the comfort of your home, the comfort of your cell phone, from the comfort of your job on Mr. Charlie's job, making money, right, during his time, because you was able to read this moment, understand what all this means in terms of consolidation, accumulation, ATR, average trading range, average true range, and realize this is a great opportunity because this thing getting ready to blow. What else gave you indicator to let you know this getting ready to blow? Well, how about the news cycles, news press releases? If we go back and start looking at the news release cycles around December the 16th, December the 17th, December the 18th, December the 19th, I bet the news release ever at that point, a lot of the talking points on Reddit were starting to pick up about how Bitcoin might be getting ready to what? Rebound again. Now you're starting to find all these different data points and say, well, hey, this is worth reading into. This is worth listening to. Let me dig a little deeper. We'll see what else somebody else talk about. Because basically all you're doing is looking for a consensus, right? Because at the end of the day, it's a numbers game. The consensus rules, right? Meaning the majority of the people who are starting to see it the same way, if they start investing the same way, what is that going to do to the asset? They're going to control the value of the movement more than those the naysayers or the detractors are. And so the detractors are going to be the what? The short sellers, right? If the short sellers are overpowered by the buyers, what's going to happen to the short sellers? See what happened right here with that? See what happened with the short sellers here? See right here, they was in control a little bit, right? They brought it down a little bit, 4,200 resistance, right? Brought it all the way back down to about 3,300. Guess what happened? The bulls started taking control again. Guess what started happening? Bam! See this pop right here? This big volume bar here? That scared the short sellers. It squeezed a lot of them at that point. They got nervous a little bit. That's the last little short sellers in that little spurt. And then it come all this buying again. Look at this buying, squeezing up. Right? People taking profit. Don't worry about it. Bulls still in control. You know why? Because now you got what? Higher lows, right? You got higher lows right here. Before you had a higher low here, right? Coming off the 3,200 resistance to the downside or support. Higher low, Walk with me for a second here. Higher low. You see where I'm going with this? Higher lows, right? Higher lows, right? You see where I'm going with this? Higher lows, right? You see where I'm going with this? Where we at today? Higher lows. Look at the price today. 11,000. How long did it take us to get from 3,200 to 11,000 right now? December, when it was at around 3,200 a token, to June, where we at now, July, basically, 6 months, 6, 7 months, 6 months, 7 months, whatever, you up well over 200% easily. You're talking 300, near basically 400% in a 6 month investment. You done quadrupled your money in a 6 month investment. Now, here's what's gonna really cook your noodle. Imagine how much money you blew on trivial stuff, on infinitesimal things, on silly stuff between December the 15th all the way to July the 7th today. Calculate how much money you blew on trivial stuff. And be honest, don't lie. Calculate the money you blew on trivia stuff that given the opportunity to take it all back and you had a chance to put it in Bitcoin, right? Or any other asset. I'm just using Bitcoin as an example now, whether you use it or you don't. Imagine you had the opportunity to do that. When you got in at 3,200, meaning you say, oh, I'm gonna go and make this, this purchase here. Because I always got the ability to, cut my loss and get out. I'm not gonna lose it all. I'm just gonna take advantage of this opportunity on this dip buy here, get in where everybody calling this the bottom. And let me see, I'm gonna ride this thing out. I'm gonna be patient, I'm gonna be diligent, I'm gonna let my money go to work for me. Right? So I don't have to work so hard for it in the future. Right? I got this money to blow, right? I'm not gonna waste it on something crazy. It's getting around Christmas time, so as opposed to me going out there buying and appreciating, jets, some jet skis or something silly, or outfit, or a few outfits that cost about $3,000, some clothes that's gonna be, fading and getting ragged about next, 5, 6 months, right? Ain't gonna be worth the pay, the thread it was kind of, woven into, as soon as I buy, hit that cash rate and go to Ching, I'm out of $3,200. I might well buy myself, one token of Bitcoin for Christmas. You bought that token for Christmas, $3,200. Set it and forget it investment. 6 months later, you up how much? Let's just go and say 12,000 right now, right? It's up 12,000. How much you up right now? Not $9,000. Wait, what? You up nine? You up $9,000? Wait, what? So what could you do with that $9,000 right now? You can go out there and buy you a lot of jeans, can't you? You go out there and buy you a lot of shirts now, can't you? You can go out there and buy your wife, or your husband or your child, all kind of silly stuff if you chose. But given the mindset that you've been able to acquire by being patient and diligent with yourself to learn this craft, meaning just learning how to invest, because guess what? These are different asset classes. These no rhyme, no reason to anyone you invest in. Mutual fund, ETLs, binary options, Forex, crypto, equity, whatever. These are just different asset vehicles. The goal is to learn how to what? How to work this machine. Work this machine called investing and trading. That's what we're here for, right? I would think so, right? That's why you signed up for this mentor session if you signed up for it, right? To learn what it entails to be in a position to be able to do this stuff, right? So when we break all this stuff down, somewhat like a science, even though it's not a scientific value, but it is in some ways a lot of science wrapped into investing and trading. When you learn all this stuff and learn how to go out there and maneuver, well, guess what? Once the light bulb goes off, it don't go off. Let me repeat that. Once the light bulb goes off, it does not go out or go off ever, because you don't have to be recertified to learn this stuff. Once you learn this skill to the point to learn how to function in it, you set for life. Meaning you can transfer this skill onto your babies, onto your nieces, onto your nephews, onto your family members, onto your peers. You get where I'm going with this? It's the gift that keeps on giving. Because again, this is something that's never going away. Right? Your job can close down tomorrow. Universe forbid, none of that happens to none of us that's listening right now if you're still out there in the workforce. But again, ain't no job security and waiting on somebody else to pay you, cut you a check. Unless they owe it to you. let me say that. But outside of that, Ain't no job security in that because you're waiting on somebody else to feed you, clothe you, and shelter you. As opposed to finding other ways you can get to the bag in the event something go haywire on the job. Guess what? You got a backup. You got 2 or 3 backups. You got some investment properties out there. You got some assets, allocated assets going in the different asset class you invested in. You got the ability to VC, with some other brothers and sisters out there got other things going on, project. You're always in a position to make some money or to go out there and acquire other resources, so to speak. That's what financial literacy is all about. That's what the sacrifices in terms where your peers might be saying, "Hey man, I'm going to the bar, man. Let's go to the bar. Hey man, I'm going to the gym, and not the gym, but over here to this pool party. Let's go over here." You constantly just going and going and going. 'Cause the more you leave out your house and you're not getting a return on that investment, besides the emotional high, you're losing money, right? Because it costs money to get up and crank your car up. It costs money, oil, transmit. You may not have to do that every day, but you get what I'm saying. You still have to spend money. All right, stop and get a 12-pack of drinks, man. Stop and get some napkins. Stop and get some ribs. You spending money. Now, again, I'm not saying enjoy life, don't enjoy life, but there's a time and place for everything in terms of when the right, when the resources are plentiful to be able to perform at that level. It's better to have and not need. So if I can acquire what I need through utilizing these different streams of income, that does not really require me to do a whole lot of jumping through hoops and turning backflips and turning tricks and all that kind of stuff, then I think that's a no-brainer that I would want to learn something to this nature. Even if I don't do it at the level that everybody else is doing it, as long as I still have the skill set to be able to do it, because guess what? Again, you can open up a brokerage account a lot faster. You can open up a bank account. Let that marinate. They don't care about your credit, your criminal history, how many children you have, right? If you skipped the class in college, if you cheated on the test, none of this. I'm saying I'm not saying do none of that stuff. Y'all get what I'm saying. None of that stuff don't matter. They don't run your life story. How many places you done lived in before you got to where you at today? They don't care about none of that stuff. All they need to know is what's your social security number so they can track you through the IRS necessarily, and the rest is history. Literally. That's the only thing on these brokers. Open a brokerage account that's most important above all things. Your social security, because they need to track you what IRS value. So they can make sure they have all your pay value work, right. Under the capital gains taxation, and also the money that, again, if you lose money, you can always turn around and claim that money too. So guess what? You even can write off your losses. Hello. Not saying you want to be in a position where you have to write off losses, but you get my point. You can't write off a lottery ticket. I'm the last time I checked, ain't no writing off no lottery ticket. I don't think. I could be wrong. Some of you guys may play the lottery, but you can't write off that lottery ticket that you lost. Right? You can't write off that, that pool party loss, or spending money unless you use it as a business, a business expenditure. You find a way to maneuver into a business expenditure so you can write it off. But outside of that, typically you ain't writing none of that stuff off. And under this new tax plan, it's so ragged now they take away a lot of these little free liberties to write things off because Trump figured out how to get that money back in the hand of the wealthy again under this new tax plan, and it's really hurting the middle class. When people were so thinking it was going to help the middle class, it really didn't. Now that we've been 2 years in the game, that tax plan really didn't. It's really tailored more towards the corporate sector and also the greedy people who are in the 1% value. So again, we've been bamboozled by a slick talking politician. But that's why all people get always bamboozled by a slick talking politician. They ain't nothing but charlatans and suits. That's all they are. So again, no disrespect if you got a particular party you follow. Hey, that's where you get your hair done at. Don't get personal, right? Do that on your own time. We're trying to figure out how to get to the bag to eliminate all that. How do you supersede the politician? Get some resources underneath your belt so to the value that their policies don't even affect your bottom line in terms of how you live your life. That's what real living is all about. Be the king of your own castle. Ain't no politician the king of your castle. Ain't no president the king of your castle. You the king of your castle, or you the queen of your castle. Live your life as such. Stop being a coward into your own mentality, thinking that you have to bow down to what some government is telling you to do. Hence, that's why Bitcoin got started. Hence, that's why this thing right here is up to $11,000 right now, and the bank's mad because they couldn't shut it down. They just thought they were going to short this thing to zero because they didn't want this competing against fiat currency, fake money. But guess what? Now they starting to get into it now. Ain't that something? Can't beat them, join them. Now banks getting in left and right. Now Facebook want to start a cryptocurrency. Ain't that something? After they banned cryptocurrency ads on their website. Ain't that something? You can't beat them, join them. Y'all see how that works? Decentralized for the people, by the people. FUBU for us, by you, right? Think about that. It reminded me of that movie, How High, when I was back in college, right? That used to be one of our favorite movies when I was in college, right? We used to watch How High almost after every day we come off from class. Man, put in that How High video, man. We sit and crack up there watching that. And the Asian guy was like, man, we went into the principal office, or the dean office, Dean Kane. He like, what is that you wearing? And the Asian guy was like, boo foo. Boo foo? What's boo foo? Buy us, F you. That's basically what that's what crypto is. It's buy us and F you. Hey, y'all get what I'm saying. Have fun, man. Have fun a little bit. Let your hair down. So again, that's what I'm saying. So be the author of your own story. Be the captain of your own ship, right? You know what? Be the front man of your reality, of your lead your war, your battle in the way that you want to lead it, right? And you can do that by understanding how to get the resources that you would never ever thought you could probably access, given the opportunity, or some people really breaking this stuff down to you where you can really understand what's going on here, right? And I know I'm paraphrasing a lot, but I understand some of you guys are already kind of a little bit more advanced than others, and some of you guys are probably thinking like, man, well, okay, well, what's even the indicator? Right? What's a 200-day moving average, right? What's a Bollinger Band? What's a RSI? What's a MACD or stochastic? What's all this stuff? Okay, that's stuff that we can easily learn too, and that's what I provide this for the village, so we can kind of work together, help each other out. So in the same breath, you may ask in the back chat, well, hey, brother African Emporium, what is the RSI or what is the oscillator? What is this? Somebody in the back chat that's family, right? Because we all family here should be able to pick that up right away. Like, hey, this what this is, or here's a link to that right there, what you need right now. Or hey, go to Investopedia and you'll find out exactly what that is. Read over it to the point where you can't understand it much. To the point you can't understand that much more of it that you can do on your own. Then come back and we'll help you even unpack it even more. So basically, what we're saying is, in order to get into the game, you have to be willing to put some skin in the game. You have to be willing to want to research on your own, because investing in trading is not a lazy man's game. Let me repeat that. Investing in trading is not a lazy man's game. The same amount of due diligence you put into buying your first home, your favorite car, a pair of sneakers that you like, or a purse, why you wouldn't want to put that same amount of energy into learning something that can give you the kind of return that you could never have gotten going to work for somebody else if you learn how to quantify this stuff in a very, very simplistic way. I'll wait. I'll wait. So again, it's about getting your priorities together, realizing your power, your strength. There's power in numbers. So that's why I always say this is a think tank. This is a living, breathing apparatus where we're coming together, we're sharing ideas to quantify information to the best of our ability so we can go and get to the bag. Be it together on our own time, doesn't matter. It's us against them. It's not us against each other. That's why I love this here. See, this ain't about ego over here. This is about, hey, what can we do? How can we come together? How can we strategize to put ourselves in the best position to win? Hey, what do you think about this stock? Hey, I think this. Well, what do you think? I see this. Can we meet in the middle? Is it worthy? Well, if not, scratch it. Let's go to another asset. You know how many different stocks out there that we can trade on a daily basis, guys? We talk about over tens of thousands of stocks that we can trade. Let that marinate. Well, think about your job right now. How many buildings of your job that you're working at right now, how many other buildings do they have outside of the one that you're at right now? Let that marinate. Let that marinate. When we talk about opportunity, right? If you want to pick up and move tomorrow because your wife or your husband, got another job somewhere else and they want to move because that job probably pay a little more than you got, could you pick your job and move with them? Could you be able to work remotely through your job today without having you have to be required to work that brick and mortar because that's the only one they got? You see what I'm going with this? So think about where you are. Are you leveraging life properly? Are you exhausting all different opportunities out there to be, put in a position where you can find multiple streams of income so you can survive in a world absent of somebody else pulling all the strings for you? If you can check off a couple of those boxes, then guess what? You're good to go. You're good to go. And that's what this is all about. So the same way you want to front load your life, through proper education and knowledge building and being autodidactic, learn how to self-educate to put yourself in the best position to win. It's the same thing investing in the stock market. Front loading, swing trading, lessen the risk value, not having so much exposure out there, not just making decisions on a whim, thinking it all the way through, giving yourself enough time to absorb the information, make an educated decision based upon not necessarily educated guess, but an educated decision, and then walking away from the opportunity, walking away feeling like you've done everything you need to do. The rest is up to the market at that point. Basically, what I'm saying, the rest is up to the market. Don't fight what you don't need to fight. Don't make any unnecessary changes where you don't need to. As a matter of fact, I posted something on Facebook the other day about crypto trade. It was one of my little so-called promo ads for my investing, my mentorship that I do. But let me see if I can pull that thing up, man. That thing had me crying. This one right here. This is it right here. If you guys can see my screen here, you guys can see my screen here. Let me see if I can do this here. See this is reality here, right? Let me see here. Let me see if I can do this here. One second, guys. I just want to share this with you guys here. All right, like I said, we found that we can have a little fun here before I get ready to close down here. Let me run that back here, right? See, when you training to be successful, ain't nothing you would do. It ain't nothing you would do to put yourself in the best position to be successful. Now, I'm not saying go do what they doing. Now, don't go out there and do this now. But you're gonna put yourself through the level of testing, right? Mental testing, physical testing, because ain't nothing really you doing here that require a lot of physicality. That's one thing I love about trading and investing. You're using the best muscle you have, right, in your mind, right? You're not using elbow grease, back grease, and knees and all that. You're not blowing your backs and knees out. You're using your mind for a change, right? You're using your greatest tool you got is your mind, right? Your weapon, right? Your mental weapon, right? The art of war, Shinzu, right? Matter of fact, hold up, where the book at? So you got to be prepared, guys. Right? Matter where that book? It's probably upstairs. I think it's upstairs. Right? The Art of War. Right? But the Art of Leadership. I mean, all the kind of self guru. You got to put yourself in a position to be successful. So again, my commentary. Don't force what isn't necessary. Train properly. Right? Due diligence and discipline. Right? The only two secret ingredients that stand above all other rituals and regimens when investments are involved. Investing is a marathon that at times turn into a sprint, but the methodology is to always think long term, right? Slow and steady, right? We at We Trade HQ, obviously y'all know I mentor for We Trade HQ, right? Offer realistic training and mentoring to anyone who values attention to detail over mass consumption ideology. Everything that I've been breaking down today is attention to detail. Y'all see where I'm going with this? It's about attention to detail. That's what good due diligence is all about. It's about understanding the values of attention to detail, not missing nothing. Overturn every stone, overturn every leaf, overturn every piece of information you possibly can to put yourself in the best position to be what? Profitable and not just mass consumption ideology. Hey, this stock gonna run tomorrow, guys. All y'all ready? And y'all were like, everybody like, yeah, sure. No research on their own, no nothing. They just ready to just go what somebody else says, right? No, we're not gonna do that. We're gonna take our time, break down the information, right? That's what this is all about. Right. So again, no mass consumption ideology, fun and homely type settings in our Discord room to make every genre, if you trade big boy stocks, penny stocks, option trading, crypto trading, forex, etc., to traders feel at home. So I'm just saying our Discord room is pretty cool over there. You get anybody over there, full of egos, people cool. I mean, there's other Discords out there. Room, not saying you have to come join this one, but I'm just saying the environment is very cool and conducive to people who want to come in there and learn. If they have really, if they like that kind of environment where they're not having to feel like they got to compete with everybody, right? So I'm just saying, be join us, connect with us, learn with us, build with us, profit with us. Look me up, have fun, make money, right? One of my favorite mottos to have fun, make money, right? So again, train properly. Train properly. As you see right here, train properly. Due diligence and discipline, right? T-shirt moment, right? Everybody need to walk around with a T-shirt that says due diligence and discipline. People might, what do you mean by that? You'll get there one day, grasshopper. You tell me you'll get there one day. So this is train. Not you don't have to go this extreme, but train. Right? Right? That's crazy, right? If not, you're gonna end up like this guy right here. Right? If you don't train properly, you're gonna end up just like this dude right here. When we bring that brat, whatever. It probably ain't gonna even work. It's all right. But again, you want to end up like this guy right here, right? You don't want to end up like this here, right? So you don't want to because you're in train. You got smoke, right? You got smoke on the bad stock play, right? But again, y'all get what I'm saying. So again, it's about having fun. It's about understanding the data. It's about understanding information. Where to go to research, how to research. What you're looking for. How to front load properly in terms of the different data points, fundamental analysis. Where the stock is at in terms of its PE ratio. Where's it at in terms of its week to monthly to 3 month timeline in terms of why the stock has grown or it had a deficit since that point from the last earnings report. What is the short sellers' interest on the stock at this point? Again, and there's so many different data points, right? And we can just speak about it for days of different things out there that people are looking at, right? Right. And so again, it's like building up until you get to that point to the pressure cooker perspective, right? I got enough information out there now to put me in the best position. Let me move on this position, right? That's when it comes down again to that last W is the win, right? And so again, this is why we take all this stuff, serious. This is what we train for, right? So when you think about Nike, right? See, we just talk about Nike. Look at them shoes pop up. Look at Nike. Look at Nike, right? And we go over to the futures market right now. We're looking at the futures market live, right? This is the market looking like right now in the futures market. We see that the Dow is down 9 points. The S&P is up 0.37 cents. On the daily in terms of the futures market going into tomorrow. Nasdaq is flat. Small cap Russell 2000 up $2.15. It's been lagging a lot lately too. So it might be the week for the small Russell, small cap basically, or the Russell 2000, Russell 1000 to pick up a little energy. Who knows? But the VIX is also up right now, so volatility is up. Anytime the VIX is up, typically the Dow is down or the S&P is down. Right? These are pretty much inverse correlation based asset basis, right? Indexes, so to speak. Right? Volatility is bad for the stock market, right? Because that causes the ebb and flow of the natural growth to go up slowly to be kind of eradicated, right? Well, a lot of people selling and buying, it caused that ebb and flow to kind of be disrupted. So anytime the VIX is up or the TIPS is up, then obviously sometimes you're gonna have a lot of fluctuation with the Dow or the S&P or the Nasdaq or the Russell, right? Right. So again, that's what the future market looking like right now. The Dow is down 7 points, so it must be a Dow laggard happening right now. I mean, a Dow stock that's weighted in the Dow, like maybe like Boeing or Apple or something like that, that's dragging down the Dow. While everybody else is green, slightly green, ever so slightly green, but the Dow is down 6 points right now. Now this is a change between now and 4 a.m. and tomorrow, but right now, the futures market is very sluggish. People not necessarily, overexcited. Ain't no weekend news happen. Ain't no Trump tweet came out enough to kind of spook the market or to pump it like they've been doing lately, pumping the market. And so this is another good indicator to plan for come what? Tomorrow. Right? So again, this stuff is free. This website is free. Investing.com is a free website. The future. Matter of fact, let me copy it and paste it and share it with you guys. Hold up, where we at? Right? Let me put this right here for you guys. This is a free website. How much did that cost me? $3. Free 99. Free 99. Right? Cost me no money. Now there's other ones out there too. Again, see what I'm saying? You don't have to choose what I choose. But we talk about how to utilize free platform, free apparatuses, things of that nature to put us again in the best position to be what? To be on top of the news piece, on top of the the real time reality of what we need to be focusing on, right? So in the event that we wake up tomorrow at 4 a.m., some of you guys probably gonna be up that early. Like, hold up, Africa, poor. What you talking about, brother? What you talking about some 4 a.m.? What you talking about, Willis, right? Right. But again, you can kind of peep in on the market when you're watching your favorite basketball game, watching your favorite football game, you're watching the track and field event, right? You out with the family, right? You can peep down and check. Let's see what the future market looking like right now. And somebody may look at it, man, what are you looking at, man? What are you doing? You be like, I'm working. You working? Yeah, yeah. I work for my cell phone. I work for my my tablet. Right? I'm working. This is me kind of working. Really? What do you do? I also invest in invest in trade derivative stocks. You know, different asset classes. Really? Yeah, yeah, yeah. Outside of work for Mr. Charlie, right? But I also have my own values to produce income. Well, how's that like? Yeah, it's very exhilarating. It's fun. It's exciting. I'm the captain of my own ship. Yeah, yeah. So you mean are you making money? Yeah, yeah. I do pretty well. And you can be modest in your approach, but reality is that see, if you're not profitable in the way that you want to now, doesn't necessarily mean you will not be there a year from now, 2 years from now, 6 months from now, a month from now. Again, we got people. I mean, the things I've seen since I've been doing this, it's mind blowing. Some of you guys have been there to witness it too. So that's why I'm not saying that you guys haven't experienced or seen yourself. Well, I've seen somebody make again $120,000, $120,000 in a matter of about 4 hours. 120,000 racks in 4 hours just by pushing buttons. And I helped them make 20,000 of it. And that's why I feel so confident in saying it, because it's exciting to see that. And I get excited to see somebody else make money. Even though I could do what I need to do too, but that's what's so exciting about this. So I would want to see over Sunline make about $10,000, $20,000 in a day. Overseas and make 20,000, 20, 30,000 in one day. To see a brother Brandon make $20,000, $30,000 in one day. To see a family like Stacy make 20, 30,000 one day. My brother Marcel make 20, 30,000 in one day. I mean, Over Gore make 20, 30,000. Brother Marquis 20, 30,000. I mean, the list is any of you guys is paying attention. Brother Jawborn, Brother Jared, any of you guys is listening. I would love to see that become a natural reality in y'all guys' life. And y'all know it's very relevant and very realistic if you learn how to do this stuff properly. And that's what I'm saying, because y'all done seen people do it yourself. Y'all done saw some of my little days, whatever. Y'all know I'm, very humble brother, but I ain't, come on. And you like, well, okay, well, what does it really require? We just kind of broke down in so many words in layman terms out of all that stuff I was just talking about, what it really entails that you need to do to be able to put yourself in that position. But you got to take it serious. See, that's one thing I love about this here. See, a person can't hold your hand through this here. We can provide the data, we can provide the information, we can provide all, the check downs and the whatever, what to do, what not to do. But you still got to go out there and make sure that you doing your part too. So again, you have to put skin in the game too. As I always say, again, investing and trading not a lazy man's game. You could be lucky, or I could say, well, hey, hey, take this trade, guys. This trade where I done enough research on it, I think it's gonna be good. Hey, take this trade. Everything work out. You do exactly as I tell you. You make some money off that trade. Oh man, that was a great trade, bro. You got any others? What else you got? Hey, take this trade here too. It seems like it's gonna be pretty good setup. I think everything's good. Buy it at this point, sell it around this point here. Don't be greedy. Do exactly as I say. You'll be good to go. Boom. You do it and work out again. Boom. You're like, oh, okay, this is great. Now every day you coming back like what? You hungry, right? You give me a trade. Now imagine if I go off the grid, I leave. Now you gotta learn how to do this on your own. Now you're like, bruh, oh, bruh. Woo, boy, I had to, man, the trade was fun when I did it, but I had to let it go, man, because, I didn't, basically, I didn't want to do no work on my own. So, I had to give up the opportunity, man. I'm good. I'm going to go back to work. I'm going to go get me a second job right now. I enjoyed that money when it came, though. Woo, boy, but nah, that's just too much work, man. What? All you're doing is looking down at your cell phone in your free time. All you're doing is opening up your tablet in your free time. All you're doing when you're on the job with Mr. Charlie, if you sit in front of a computer screen, is open it. If it ain't firewall, right? All you're doing is going to investing.com, investopedia.com, tip ranks, stock twits, earning whisper, right? All you're doing is going to these websites. They're free. They're free. Cost nothing. Tip ranks, right? Understanding what charts look like going into the earnings report, right? Getting all these different analysis and data points. All these are the data points. News publications, right? Hedge funds, institutional investments. You can look all this stuff up. This stuff that you would never walk into a company and ask them to give you the schematics of what this stuff, all this stuff mean. These people look at you like sideways, like, man, you better get out of here before we call the cops. If you don't believe me, go into your bank and ask them how much money in the vault right now. Or ask them how much do the CEO make or the residing director of that branch, how much money do they make? Go in there, find that person, then say, how much do you make on an annual basis? What are your incentives and bonuses? That man probably gonna call security on you. Security, security. But guess what? If you want to get all that information, what do? You go right on over, right, to see quote media, NASDAQ, pull up what the company filings, SEC filings, and all the information right there, right before you. I mean, I could literally do it right now and show you what I'm talking about. Ain't nothing you can't do. You can pull all this stuff up. You can go to NASDAQ, go to company history. Matter of fact, I think let me see. Let me see. 181 bar. No, not the fly. I think matter of fact, even bar chart. This is another a free apparatus that's very valuable, invaluable. Bar chart, oh man, option trading, man, the best. Regular trading too, but it's really good for option trading because it gives you, option prices, option volatility of all the stocks that are out there. Even categorize them from ones that have the highest IV, unusual option activity, meaning what people are spending their money in at the moment. So you can kind of plan out your trade from a weekly perspective. Remember, I was talking about option trading earlier. You want to elongate that trade to like a week time, whatever like that. When you have to deal with all this trade, look here. This is a synopsis of what's hot right now in the market as of what? July the 5th. So all these stocks right now are hot come tomorrow. That everybody's gonna be looking at Snapchat, right? For the for the $19 strike price calls, right? With an expiration date of what? July the 26th, right? Everybody gonna be looking at that and look at the bid and the ask. That's the price of that contract. So basically, 13 cents is how much, guys? How much is 13 cents, guys, in the options world? Some of my option traders out there. When you see the price at 13 cents, 14 cents, how much is that for that contract? Right? So you guys can see exactly what we'll be talking about. You're talking about a $19 strike price that the stock could possibly move $4, or close to $4, because you can still make money even on the way to $4, even though it may not hit $4, right? The time decay don't get you. So you basically got 2 weeks, right? Basically around there 2 weeks to get to the $19 $19 strike price if you buying the calls for it right now at 13 cents a contract. So what's 13 cents? How much does that 13 cents mean in terms of how much you got to spend out your pocket? Where my option traders at in the family back there? Where we at? There you go, brother JR Turn. So you mean to tell me you only got $13 to invest in the opportunity for a stock to move dang near $4 between now and 2 weeks from now? Meaning if it makes it to that $19 strike price at least a week before that, or at least maybe 3 or 4 days before that expired contract, and it go above that, the potential that you can make is well over $400+. You mean to tell me you can't turn a $200, at least $200-300? Just be honest with the time decay. So you mean to tell me a $13 investment that could turn to a possible $200-300? You tell me you don't have time to wait or the money to invest in something like that? You mean to tell me that you don't have the wherewithal to convince yourself to say, well, hey, I was gonna blow this $13, again on two $5 fill up boxes at Kentucky Fried Chicken and get this stomach ache, right? Get this ulcer, right? And you mean to tell me you couldn't put that towards buying a call of Snapchat for the opportunity for it to get to $19 strike price in about 2 weeks time? So a $13 investment for a 2 week gestation period. Let that marinate. A $13 investment for about a 2 week gestation period. Let that marinate. See, when you make this stuff make sense and you deduce all the fear and the doom and gloom away from this here, and it begin to look more realistic to you, that's when you start to realize the light bulb goes off, guys. That's when the light bulb goes off. See, a lot of us, we talk ourselves out of good opportunity, or we over talk ourselves out of the opportunity. Don't overthink it. Don't underthink it. Be balanced. Understand what you're getting into. Right? Use good deductive reasoning. Think about it. $13. I was gonna blow that on so and so. And some of you guys may drink a little bit. Again, I'm going back when I did do that stuff many years ago. Be honest, right? And I'm like, well, man, I want to get a fifth, right? A fifth of Hennessy, right? And that fifth of Hennessy gonna cost me about $30-40, right? No, let me just get the paint. right? It's still gonna do just as much damage, right? I may not have a lot left over, but let's be realistic. 2 or 3 shots, right? 2 or 3 real shots, you already gonna start feeling feeling a little fuzzy, right? And out of a paint, you still already got what about 10 or 12 more more shots in that paint, right? So you ain't gonna be doing this sundown anyway. Let's be realistic. You see what I'm saying? So as opposed to buying the fifth, right? You bought the paint. So it's supposed to buy spending $30, $40, you bought the paint around what? It's 15, 16, somewhere around there, right? Somewhere close, somewhere around that point, and you still get the same desired effect. I guarantee you ain't gonna be any less drunk if you bought the fifth just because you bought the paint. Now you got some money left over to put towards what? That buying one call, a Snapchat, just to wait 2 weeks to see if you can make that thing come to reality. Guess what? It may not even take 2 weeks. Or guess what? Tomorrow it may jump up and run 70, 80 cents, and you may already start getting into the money because guess what? As soon as you buy the option contract and start moving towards your strike price, you making money all the way up to that point. You're making money into that strike price. So you may spend $13 and by close of business tomorrow, close the bell tomorrow, you may be already up, hey, 15, 16, $17 on a good move with Snapchat movement. I mean, this is hypothetical, obviously, but you might have already doubled your money just by tomorrow move only, and the stock only moved up maybe about 70, 80, 30, 70, 30 cents to $1 plus. And you doubled your money in that little time and not necessarily having to wait the entire 2 weeks if you don't so choose. Because you can turn around and sell it right then and there if you chose. You see where I'm going with this? Now here's where it's get really exciting. I know I'm preaching to the choir with some of you guys because some of you guys are a little bit more advanced, but it matters because we're here to help everybody get to this point. Imagine if you bought $50 worth. Imagine if you bought $100 worth. You see where I'm going with this? Imagine if you bought $250 worth, $300 worth, or $1,000 worth. How many contracts you get at $1,000 worth for a $14 notional value? Let that marinate. Right? You're talking about roughly, roughly close to they near 10 contracts if you did it at $10, right? Now you're getting around about what, eight, somewhere around there? 8 contracts, somewhere around there. You get what I'm saying? 80, with 80 basically, 80 times 14. So you buy 80 contracts at $13, $14 a contract, or $14, $13 a contract, right? Right? And it moves again 70, 80 cents. And typically, let's say again, like I was saying, hypothetically, you doubled your money in just that first day of movement. So basically, you got $80, $13, right? Time 80 contracts. So imagine basically additional what? $13, or whatever value in that 80 contract value in 80 contracts. So that total trade cost you 1,000, but you done made again another 1,000 in a matter of one move, in a matter of 1 day. Hypothetically, it can happen in 1 day, literally. It moved, $1 plus 70, 80 cents, because contracts turn over very fast in the option market. That's why I love trading options. I mean, you guys have seen I turned $5 into 250. I turned $5 into 250 in one option contract. I bought 5. I lowballed myself. I'm still kicking myself today about that one trade that did that. But one contract for $5, literally $5, $5 foot long, a $5 fill up box at Kentucky Fried Chicken, a $5 value meal at McDonald's, a $5 Taco Bell mixed slurry or whatever things call them, what they got over there these days, right? Turned into $250 in 1 day. And again, I bought 5, and I'm mad I didn't buy a lot more. Right? Got the receipts to prove it. Can pull them up. So I'm saying these are just opportunities, guys. That's somebody's mortgage. That's somebody, part of their rent or they rent. That's somebody's light bill. That's somebody's phone bill, right? That's a child, extracurricular money they need for school, right? To go to expensive school these days. So I'm just saying, you didn't have to do that by going out there blowing your knees out, blowing your back out, blowing your elbows out, going out there had to kiss a little behind on these jobs, right? I hope you ain't doing that anyway, but sometimes people gotta feel like they gotta bow down, to these old, overpowering, power bearing people on their job that's in position of power, like a supervisor or a boss. You see, again, we're trying to move away from the ideal of thinking that we have to work again twice as hard to receive twice as less, and that's where we need to be working twice as smart to receive twice as much. because we surround ourselves with people like me, like you, like others who value this stuff, who value our time, who value our money, who value our resources, who value our opportunity. You see where I'm going with this, guys? This stuff is not rocket science. Again, them contracts, 13 cents, 14 cents. Look at CVE here. Look at CVE here. All right, CVE price at 8.95 right now. People buying heavy on the puts right now, right? They buy heavy on the puts right now. Look at them. Look at the volume. 11,250 contracts as of July the 5th. That people thinking this stock gonna drop, drop from 8.95. Now, if it hit the $7 strike price, that's fine and dandy. But even if it dropped anywhere below 8.95, on the way to $7 a contract, the $7 strike price, excuse me, and they elongated this thing. Look at this here, guys. Look at the length of time on this contract. What that date is right there, guys. Look at that date, guys. What date is that? That's September the 20th of 2019. You got roughly about dang near 2 months before this stock, they're going to give this thing enough time to make it all the way back down to $7. It can happen in one day, but realistically, 2 months to get the $7 strike price, right? Right? This is the days it's going to take to get there. This is what I mean the DTE is, right? DT, what it's called is date, number of days to expire, basically. Just put it in context, right? Look at the price of the contract, guys. Somebody got a bid at 5 cents. The midpoint is 10, and the ask is asking around about what? 15 cents a contract. So roughly 5 cents a contract, $5 or $10, right? For the ability to make this thing to move down to $7 by 2 months. You give yourself 2 months for this thing to move down to $7. So guess what? If it did it between now, let's say the end of July, from $8.95 down to $7, and now it broke $7, now it's down to $6, and it's not even close to your strike price. You talk about the potentiality of money that you can make off this trade, bruh. Not to say they could, but I'm just saying this is the probability of the opportunity. That's what investing trading is all about. It's about the foreseeable opportunity and the trajectory of whether the asset is going to reach, exceed, or meet that reality under the given criteria of the catalyst that the company is under the overall sentiment of the market, all these different factors that we kind of weigh every day as an investor trader when we're reading these different publications, looking at the charts, looking at all this kind of stuff and saying, well, hey, what makes this stock, kind of, relevant to kind of go this direction, up or down. And that's all we're doing. The options market is a great indicator of what these stocks are going to do day over day anyway. This is what you should be looking at every single day before you take any trade. The options market. Now, some of these stocks that we trade that are very, very low penny stocks, they may not have an opportunity to trade through the option market, but yet still, if it's in a certain sector that stock may be under, you can still go and see what the sector is doing. And certain stocks that are in that sector who are the biggest weighted in that average value, that you can say, well, hey, this stock will drag down this stock if it goes down. Like basically, if Netflix is doing really bad tomorrow in the streaming industry, and if Roku is correlated to Netflix because it's in the streaming industry and Netflix being the bigger one, it could drag down Roku. Just by virtue, it's in that space. If Nvidia is having a bad day in the semi-chip conductor business, it could drag down AMD, Micron, Microchip, MCHP, Intel, right? All the other chip plays out, it could drag all of them down because it's a well-known derivative in that sector. So sometimes it's like guilty because guilty of how the saying goes, guilty due to association. The stock market moves like that sometimes. That's how crazy this thing is. One stock in the same sector drag down everybody else. So again, 15 cents, guys, 10 cents, 5 cents a contract to give yourself 2 months to potentially hit $7 strike price. GPS, Gap, this is a Gap store here. GP, I know this take like every day. This Gap store here, the Gap store. How many guys have been shopping at the Gap store lately? Right? Probably not likely. People betting on the 1750 puts, big time. Look at the contract. There's 6,000 contracts out as of July the 5th. That people are betting against this thing to come down. Now that doesn't negate what the call volume may look like, but you can always go look that up and see what the call volume look like too. Is it paralleled out? I mean, in a way where you can say, well, let me see what the ratio look like. Is the call to put ratio balanced, or is it lopsided in terms of the ratio? So how do you do that? I'm going to show you right now. Just click on that same little tab, Gap Store, right? The Gaps, Gap Inc., right? They own Banana. What Gap Store own? I think Gap Store own what? Banana Republic. What they own? They own a couple of Navy, Old Navy, right? Gap own them all those stores. I don't know if y'all knew that or not, but guess what? See, you're gonna learn something today. Look at the overall analyst rating and earnings estimates on Gap. Look at all this bad data here. Hold, right? 15 based on 15 analysts. Y'all, one person saying a strong buy, 10 people saying hold, one analyst saying moderate sell, and 3 saying strong sell. So basically anything from a hold to sell, that's who carrying the most weight of this entire movement of the stock right there. That means there's a lot of people betting against the stock right now, or a lot of people that's not favorable against this stock right now. So they actually seeing that this stock probably gonna sell off some more where it's at because they're not actually bullish on it. You only got one strong buy. Everybody's either hold or sell or strong sell, right? Meaning set it on fire, basically a strong sell. You might want to put some gasoline to it, right? So real quick, let's go with the option price real quick. Let me get ready to wind this down here, guys. Get ready to wind it down. Let's go to the option price, the options, pretty much calendar for the next week's expiration week. Now this is for next week. See expiration right there? That's for next week. So basically by next week, these are the people who buying this stock for a particular move, right? To that particular strike price. Whether they get there or not, they're still buying for the opportunity for the stock to move up into that strike price or even hit it or exceed it, right? You still make money on the way, even though if you may not, take it all the way. That's one thing I love about, again, options. So like I was saying, look how many people betting against this stock to come down, guys. Look at this ratio here. You see this here? Let me take off all that blue there and put it down here. Y'all see that right there? Let me see if I can blow it up. My screen probably small. Y'all ain't blow that stuff up, African Port. We can really see it. Look at the call to put ratio. Look at this call to put ratio. 10.23. Look at how many people that's betting against the stock to come down. Look at the few people that's hoping it's gonna go up. Now, what side of the trade you want to be on if you was getting ready to take this trade? You want to be on the put side, meaning the short side, meaning the stock coming down, or you want to be on the side where people trying to think it's gonna go up? What side you want to be on, guys? Some of you guys may not be new to this, or may be new to this. What side you want to be on? The put side or the call side? I asked you guys in the back chat, what side you want to be on? The put side or the call side? See what I'm saying? This is not rocket science when you start thinking about it, right? So I did all about 2 seconds of looking at that data, going over to this chart, this free chart, this free, free platform, pulled it up. 100% right, brother Marcel. 100% right, brother Stacy or family Stacy. I don't know. Okay, I think it's. I don't know if you boy, girls. Forgive me if I'm messing up. 100% right. Put 100% right over Brandon. Put all day, right? You want to be on the put side because that's a consensus there. That's like the U.S. consensus, right? When people trying to see how many people in the country, what race, all that stuff. The consensus is that the law of averages is ruling right now, right? Meaning more equals more, right? You weighted on the downside as you are than you are on the upside. You see what I'm saying? So a lot of people trapped in the call open interest because look at the open interest on the call side. It's up a little more, but not much, right? So these people in trouble right here on this call open interest total right here. They're in trouble because at this point, apparently, the stock is getting ready to make a real hard pivot, potentially to the downside. And case in point, let's run over into the chart real quick, right? Get ready to round this down for the day, right? Let's go over to see what the chart look like, right? So now we get a chance to backtrack it even to a chart perspective. Look at this chart, guys. Woo-wee. And I know about it very personally because I've been beating the brakes off Gap lately. Right? I showed it when it came from up here around 19 some dollars, excuse me, 30 some dollars a share. When it broke down, it came all the way down to like 24, 25, shorted it then. I still got the receipts to prove it, right? I have to go pull them up. Matter of fact, I might can pull them before we get off here. And guess what? It gapped down again. So it gapped down from up here to here's area. Then it gapped down again. I mean, it started selling off and gapping down from here to here, right? It's basically from 25 to 20 what? $20. And then it gapped down again from 20 down to what? 19 down to what? 18. Now it's consolidating a little bit, trying to make it back to the 50-day moving average here, which is a red line here. But it's still, if you look at my indicator here, guys, y'all said this big old big old shield looking little indicator I have on my screen here with this purple orange line here. This is what you call a linear regression. A linear regression indicator. So basically, what this does, this shows you the top half and the bottom half of what a linear, logarithmic, logarithmic kind of value of a stock will be moving in under this natural flow of volume, buyers and sellers, to put it in a perspective where you might want to look at it in terms of what, buying or selling. If it up here at the top of this purple line, you see this purple line here, guys? What was happening here at this stock at this point right here? I'm gonna blow this up so you guys can see it right here. So exactly why I love this little indicator. What was happening right here at this point of this purple line? It was hitting what? Resistance, right? It couldn't break above that point there, right? See right here? See how I wrote that resistance point there? And even look at the 50-day moving average. See how I kind of wrote the 50-day moving average and actually broke below it? Right here, when it broke below the 50-day moving average and broke below that top line of this purple linear regression pivot point right here, that was the indication to go what? Short or buy puts. We buy calls and go long when we're going up. We short and we buy puts when we're going what? Taking the stock down. You make money going down, and you can also make money going up in the stock market. If anybody told y'all that yet, guess what? Now y'all know. Get excited for my newcomers here, right? Because y'all gonna learn this. I want y'all to learn this here, right? So guess what? At that point, that's a sell signal. It broke below the 50-day moving average. It was already up below the 200-day moving average, was a big indicator. And it broke below the linear regression band in terms of resistance. It couldn't break through it. All this right here is free money. All this is free money. All this is free money. All this is free money. All the way down to the pivot point. See this line right here in the middle? That's the pivot point. What did it do at that pivot point, guys, on the linear regression band? It gapped down even further. That's when they probably had some bad news that came out. Guess what happened at that moment? See this line, this little E right here at the bottom, guys? What happened? That E stands for earnings. That E stands for earnings, right? Let me see if I click on it there. Look what happened on the earnings report, guys. Can y'all see that there? It said the estimate, right, was for 30 cents a share in terms of EPS was supposed to come out 30 cents a share. Right? The surprise earnings value, they're saying, I guess it was saying 60 cents. So it was like 29 cents, a 29-cent upside value. So it's actually 96%. So they might have beat on the earnings per share, but they probably missed on revenue. That's what caused the stock to gap down. So they might have beat on their top line because there's two aspects you got to beat on in the earnings report. You got to beat on your earnings per share, right? And you got to also beat on your revenue value, your revenue output. Now you can have one up, one down, or one up, one down, or one down, one up, or you can have if two of them up, that means you should be very bullish. But if both of them down, you definitely in trouble. But if you have one up, one down, and one of them is weighted toward the value that they really needed the company to make, to be profitable at, meaning their earnings or the revenue, and that's down, guess what? It doesn't matter if you beat the top line, stock still sell off. That's basically what happened with Gap Store. Because at this point, we know from the retail sector, we just followed the overall sector as a whole, the retail sector, how many people are shopping up in Gaps? Again, we bringing it back to what we were saying earlier. This is natural common sense, natural observation. You don't have to be a retail specialist or a data analysis to figure that out. You're like, man, when I ride by Gap Store, I don't see nobody in there. That's a natural indicator if somebody's spending money in these stores or not. You didn't have to have a PhD in business statistics or business management to see that, or consumerism surveying to learn that. You see what I'm saying? That's why I say everybody is capable of learning how to invest in the market just by natural observation alone. Before you even dig into the minutia, stock gap down, boom. Now it's trending sideways. Now it's back at that resistance point. See that line in the middle here, guys? That demarcation line where it gapped down before, and it made it back towards it in terms of the slope kept going down. And look at the 50-day moving average. It kept going down. It kept going down. Now it's starting to kind of flatline a little bit here. That's why the stock been going sideways here a little bit here. Now it's getting ready to kind of make another break down or break out. Now, if it gets above this line right here, this middle line, and end up getting above the 50-day moving average, it might be a temporary bullish move. That's when you start buying to the upside. And as soon as it hit a point of resistance and stalls out, take your profit and run. Because it might turn around and do come back down again. And boom, come back down. This stuff is not rocket science. Everything I'm showing you right here, and even though it's showing that it's oversold way down here, it was oversold, and it got back above in positive territory on the RSI. The RSI sitting at around about a 43 right here. It still got more room to the downside. Meaning it can go right back down to an oversold position. Basically, when the RSI down to 16, basically do the price down here around $17 or what? $17 for a share. Even if it's sitting at $18.30 right now. And know how we know it to be true? because the option market just told us that. Didn't it not? Did it not? Or matter of fact, I could have stayed on that same chart. Let me stay on the same chart so you can show what I'm talking about here. All right, we'll get ready to wind this thing down. Remember them $17 strike price, right? With 17.50 strike price that we were looking at, that was saying everybody was buying. Right here, what did that number right there say, guys? Look at them contracts. There's 6,000 people, right, betting on this thing coming down to $17.50 strike price. 6,000, contracts that are out there. Not necessarily doesn't necessarily mean it's 6,000 people. It could be one person with 100 contracts. It could be one of y'all with about maybe like 20 contracts because they're cheap. Look how much they cost. 11 cents, 12 cents, $13. Now some of y'all, let's stop playing around, man. Some of y'all got $30 right now. You know what I'm saying? You know what I'm saying? 30, $33, $36, $40 to spend, to buy yourself three of these little contracts here, right? With a strike price, excuse me, expiration date for next week, this week coming up here, to see if this thing can get down to 17.50. Now, keep in mind, you make money on the way down to it, even though it may not come all the way and hit this 17.50. As long as it starts come down, you making money. If it hits this point and start exceeding it, that's when you're really gonna start making money, because it's gonna turn over a lot faster. Because you hit your strike price, you in the money, it turns over even a lot faster. So it kind of compounds, and you make even more than you was made if it just slowly increment, because now you inside the money. So the Greeks start working in your favor. The delta, all that stuff start working in your favor, right? The delta, we're talking about theta, delta, gamma, alpha. See, that's the part of the option trading that you got to learn when it comes to the Greeks. We can break that stuff down, another time. But all that stuff is relevant. But at the end of the day, what's most important is 17.50 strike price. These put contracts that are out there in relation to is what? Call volume, right? And the price point that people are trying to get them at. $13, $12, and $13, stuff like that. And the $18 strike prices, which is very close, because the stock is at 18.30 now. Look at those contracts. And the 3,000 contracts out there right now. How much they cost? $27, $29, $25. Are you kidding me? You see what I'm saying? Again, guys. See, that's why, again, this is my lane. This is why I get excited. Why I'm always quiet, and all I care about is like, man, how can we get to the bag? How can we show somebody to get to this money, right? How can we make this stuff relevant to other people where they can start seeing the benefit in this? And all this stuff done from your cell phone, from your tablet, from your computer, while you're on a date, while you're at the park with your children, while you're on the beach, right? While you're on the job, while you're in the bathroom, on the toilet. I'm not kidding. I don't mean to gross nobody out, but y'all know what it is. When you get into the bag, hey, take your apparatus with, take your cell phone with, get to the bag, man. Get that bag, get that money. See what I'm saying? So, you know, here in winding it down, you guys see what I'm saying here, man. Y'all see what I'm saying, right? So you see why I don't mind being a hermit crab. I don't mind, people saying, "Hey, man, all you care about that stock market is, man, you're a nerd, and all you care about is." I got a future to start playing. I got a child and children to be worried about in the future. I got a family that I want to see comfortable. Beyond my immediate family, I got peers I want to see successful. Right? I got a people I want to see become more literate and understand how to use this to your benefit. When they look at this stuff like something like taboo, right? When they say, "Man, nobody, man, that's for people that what." You mean to tell me you don't have the time and the ability to want to learn something that's really not uh you know complex to really learn, that you can learn literally on your free time? You took time to learn this stuff, how to find a way to make more money for yourself. Okay. Again, I know it's not for everybody, because everybody may not have the mental fortitude, but for those who are serious and hungry to see the aspect of the opportunity in it, the door is wide open. Ain't nothing stopping you. Being honest here, ain't nothing stopping you. Nothing. But yourself. But so again, it's not rocket science. It really isn't. It really isn't. So it's all about you putting in the time. You see it for what it's worth. And then you can go get it. You see what I'm saying? So again, let's keep. Yeah. I'm using the free version, brother JL. I used to have the premium version of Trading View. Let me go back to my Trading View chart. Yeah, I used to have the premium version, bro. Man, look. After I got to a point where it wasn't necessarily really to pay them the $200-300 for it. Just to have the extra couple of feet. I had the extra the extended trading on it. I had the NYSE, the Orca, and a couple other little added to it where I can kind of check those markets like OTC, all that. You pay like a la carte basically, and it was fine when I had it. When I felt like I needed it, but now that I don't feel like I don't need it, I'm not going to pay $200. On even that was annually. That's for an entire year just to have that feature, because now I can just go right over to TD Ameritrade. I can go to these other ones that are free and still utilize that same ability without having to pay that amount of money. So again, we work smart. We don't work hard. Now I can easily buy it and have it. Yeah, no problem. But I don't need it at this point. Just for me, for where I'm at. So I use the free version now. What I'm saying? I still got my account, so I let you know. You know what I'm saying? I was paying that that price value, the $200 for the $300 almost for the annual best, basis to have all the extra little features and all that extended trading, all that extra stuff, the Orca and the different market makers, the OTC market. I had all that stuff added. I had all of it, right? All I carted mine out, $2 for this, $1 for that, $2 for that. I had I was paying, on the annual basis, it was roughly like 200 and then $300 somewhere around there. But I don't need it now because I know how to do all this stuff literally for free to get to where I need to go based upon where I'm at in terms of my skill set, basically. But again, that comes down the road. Same with Black Box, right? So my Black Box reality, right? You know, this pretty much pays for itself through trading, right? Through my trading, and I'm also affiliated with the company, right? So I have two different affiliations with them, right? I have this one, and I also have my special discount that I have for special client, right? Now I have to go click on that so you can see I'm down there a little bit more money there. I don't know what I'm saying. Show all my little business now. But even my basic one, $1,100. I make roughly about $300, basically $200-300 every week off that there. In some cases, sometimes a month, excuse me, a month, excuse me, a month. Sometimes it's a little more, sometimes a little less. But that's just free money. That's free money, affiliate money, right? My other one obviously is a little bit more. You know what I'm saying? So that's when I keep, I keep that one for me. I show the other one now. The other one, that's where I get my little bag at, my nice little sugar cane bag. But again, this option scanner, right? This matter of fact, let's do this last little thing, then we get out of here, guys. I want to keep you guys late. See, this is the option scanner and also a regular equity stock scanner and also the OTC scanner. See, right? We were talking about those $17 puts, $17.50 puts, and the $18 puts. This is all the stuff that's happening in real time. Where that showed you amalgamation of all the stocks, the contract that people were buying, at that expiration or at that point of July the 5th. This is all of it happening in real time. You see what I'm saying? So if I go to the flow chart, see, this is what's happening in real time. Even show you the time when people were buying, so you can see exactly how much those people was buying at that time. Somebody bought a $10,000 suite. Somebody bought a $12,000 suite for the $18 puts, and also what? They're gonna go $17.50 puts again. What's the expiration date? 7/12/19. 7/12/19. Y'all see that there? Can y'all see that? We were just sitting there talking about this. You see what I'm saying? Look, guys. All the telltale signals are right there. So all these indicators, all these different cheat sheets, all these different, sites and things we could use to make our ability to translate this stuff a little bit more vivid, more lucid, right? More transparent. It's all at your fingertips. So they're pretty much, giving you the rest is all the unknown that's out there in the stock market because we don't know what the stock market gonna do one day over the next. But all we need to do is put ourselves in the best position, to have the best data, to be more comfortable and convicted to take these trades, so we don't have to sit there and wrestle our way through this stuff, guys. The rest is history. The rest is history. All right, so there go them $17.50 puts that we're just talking about, right? And if I go back to the flow chart, on Gap. right? I mean the Gap stores, right? I have it, slid out to April time. Let me condense this here. Let me go to June. Let's do June. Let's do June 15th. From June 15th to the present day time, right? Right? Or let's do the 5th, right? Because the 5th was what we had there, right? So you got people who are buying, you got people who buy some calls too, right? But the put notional value outweighs the call value. And here's why I know that to be true, even though you see a lot of calls up here too, the little green calls, right? You see what? 1, 2, 3, 4, 5 calls, 1, 2, 3, 4, 5 puts. Well, what makes this ratio dynamic that seem to be balanced in terms of puts and calls different in their own aspect? Look at the prices, guys. This is what changes the entire game. Where the money at, right? Where the money at, right? Look at the money here. Let me see if I can blow this up. Okay, that's too much for this there. Okay. Look at the money here. So look at the puts, right? You see on the calls, you see what? 21,000, right? You see 16,000, 10,000, 39,000, right? Look at the puts. 878,000. That's almost a million. That's almost $1 million in terms of people buying the September the 20th $19 puts. And it's like it ain't even that $19, at 18.30 something. They're already buying deep in the money, and that's that they think the thing gonna go down a lot further. So they in the money right now as we're speaking. That's almost $1 million in contracts. $1 million sweep contracts in contracts. 183,000, 67,000, 10,000, 12,000. Now who got the bigger money in essence to the position of the stock they think the stock is gonna go down? The calls or the puts? Where's the rocket science in that? I can see that right here, that people are betting the stock gonna come down than those who are thinking the stock gonna go up. They ain't got enough money on the call side to compete with with the money thinking the thing gonna come down. And we just proved that when we was over here looking at the what? The bar chart in terms of the call ratio and the put to call ratio. Right? Them $18 puts, them $17.50 put, 6,000 contracts, near 3,000 contracts. 27, $25, 10, 12, $13. Yeah. Right. So again, y'all see it. But again, this is what we study for. This is what we value this information. This is why we value this information. So when everybody out there intellectually masturbating, talk about all the other stuff that got to do with the price of tea in China, and ain't nothing wrong with that too. But we're gonna be focused on finding a way to get to this bag. We can do two things at one time. We can scratch out what we call pat your head and scratch and rub your belly at the same time. Some of you guys probably can't even do that still, right? Pat your head. You should be able to do all that and then some. Investing in trading is about multitasking very well. You learn how to do a lot of things very well when you learn how to invest in the market, how to read data, interpret it, input it, output it, make a decision right away. Sometimes split seconds, right? Meaning in terms of the time that you have to really calculate it, understand what's happening, see what the information, if it's good or bad, make your decision, make your buy, make your your sell, sell into it, make short sell, and then let the chips fall as they may. And then if now you're doing just monitoring it, watch see what's going to happen. The opportunity is like it's exhilarating, right? It's exhilarating, right? But again, this is what we study for. I'm take this off. I guess I already got the thing off anyway. Yeah, but this is what we study for, guys. This is exactly what we study for. So again, the rest is just pretty much putting it in practice. And so this is why we go hard. This is why we study. This is why we're going to continue to break down this information, right? Share this with people that you may think they want to learn this. They don't even come to my channel. I'm not even. I'm so selfless with this stuff. I don't even care if they even come. Just have them start looking up videos about learning how to trade. If you want them to learn, come get a little bit from me. Have them subscribe to my channel, or have them come to these sessions when we start having the training session. Have them show up. It costs you nothing. If you want to get the private mentoring, hey, again, it breaks down to $1 a day on the WeTrade HQ. $1 a day. That means you get personal access to me. You can call me, email me, write me, whatever. Send me a pigeon note, whatever, smoke signal, whatever. You got my attention because I'm here to provide that service for you. All right. And since I'm a little bit more comfortable since I moved off into the new place now, we finna get back to grinding. I took a little time off to get my little house in order. Now it's go time again. So again, breaks down to $1 a day. So whatever. But outside of that, when I'm on live throughout the day, intraday trading, whatever, you guys welcome to pop in, check it out, ask questions, share trades that you may be taking, gold information. Let's think tank. Let's make money. Basically, that's what it's all about. Let's find a way to get to the bag. All right. Let's find a way to get to this bag. All right. And so, closing out, actually, Friday, man, look here. We're getting to it. We're tearing up a little bit Friday. We're tearing up a little bit Friday out there. So again, hold up. Just let you guys know, we doing this for the long haul, right? This ain't no get rich quick. This ain't no reality in that. You can make that kind of money real quick. It's there and it's legal, but we still thinking long term, right? We're thinking long term over here because, we want to see, all you guys prosperous in this, 2 years from now, 3 years from now, 5 years from now, 10 years from now, when you again own some island somewhere with your little favorite little drink with your little tiki straw in there, right? While you watching the family play in the pool or the lake or the river or the beach, whatever, and you sitting there, taking your couple of trades, saying, hey, this is how we're gonna pay for these jet skis today. This is how we're gonna pay for the deep sea, fishing adventure. Get daddy about 20 minutes to an hour, right? That's what we're working for, guys. It may not have happened yet. It may not have came into fruition for you guys yet, or whatever. Give yourself the time to learn this, because you're going to be successful as long as you stay at this. The steady plow mentality, right? The John Henry syndrome. Keep striking out, striking them what? Them nails, right? Laying them tracks. Keep laying those tracks. Your day is going to come, right? Your day is going to come. And these kind of days right here, right? You can do that in a day. Hey, there ain't gonna be nothing far fetched where you can do that. That's a day, grinding, working hard, making moves, making things happen. That's very realistic, right? That's somebody's entire month. Let's be realistic. That's somebody's entire month. If you could do those kind of numbers in a day, give or take, plus minus ratio, it's a no brainer. But again, we have to put ourselves in a position to work towards those goals. Right? So goals matter. Right? I always say goals matter. Financial literacy matters. Right? Not wasting your time on trivia stuff matters. Not intellectual masturbating about things that can't put no money in your pocket matters. There's time and place for everything. Be balanced above all things is what I'm saying. Be balanced. Don't just be one-sided into things that can't feed you. And y'all get it. So let's work hard. Let's train. Let's study. Get in our Facebook group if you ain't in there, or whatever. Just connect with us in the Discord room. Everything you need, matter of fact, is in the description box. Yeah, you go to the description box, you'll see I have pretty much all the different links to get with us. Let me see. Do I have the Discord link in there? Matter of fact, I need to change that Discord link because I think that one expired. Let me get y'all the new Discord links. If y'all want to be a part of our We Trade HQ Discord room, it's free. And we got a free website where it offers you tickers, it offers you information. Guys, it's unbelievably, a wealth of plethora of different information you guys can benefit from. And it's great guys over there. And Brad is great guys over there, and Jacob and the whole family over there. Connor, Young Money, everybody over there. Done. Everybody over there is just like me and you. They're hungry. They're selfish. They willing to, they go out their way, to help people become, more knowledgeable in this craft, so they can see themselves benefiting from it. So that's what I love about, about that, about the family over there, We Trade HQ. And I could have been with a lot of different other groups. People offer me all different kind of opportunities. Hey man, come over here and work with our people. And again, I'm no one special. Again, y'all know I am very selfless. I'm very selfless, right? And I don't even look at myself as some guru. I just have a passion to see people succeed. And because I know what that does to me. When one teaches, two learn. That's one of my favorite quotes by Robert Klein. When one teaches, two learn. I get better every single time I share information with you guys. When we interact together, guess what? We both get a little bit more knowledgeable together. And we walk through this thing together. That's why I always say Ubuntu, right? Which is what, the value of I am because we are. Yoruba, right? I am because we are. We peers at this, right? Ain't nobody in front, ain't nobody behind. We peers. Ain't no egos. Ain't no intellectual masturbating. It's hey, what's the data? What the data looks like? Is it beneficial? Can I make a bag from it? I don't care if it's $10, $15, $20, whatever. All right. So again, connect with us. Let me get the link, guys, uh, for the Discord. I think the other one have expired since the last time I used it because they expire. All right. But let me get the link, guys. So if you guys are interested, come on in. Join us. Connect with us. Again, the We Trade HQ, your website is free to sign up. I mean, crypto. I mean, it has everything. Crypto. Regular training courses. If you're talking about a la carte training course, if you just want to look at the dashboard, see what kind of stocks are moving that day. I mean, again, it has a lot of stuff. Um, that's very useful. For the average trader. You know, who values an opportunity. To kind of keep up with what's happening in and around them. So God, them guys put that stuff, to test, built up a very, very nice, website, and it's just another place that you can go to get good data from, right? Another good place you can go to get data from, right? So get excited for that, and again, the rest is history. The rest is history, guys. So, all right, so let me get that, get the website. You guys can check it out. It's in the description box. I forgot. It's already in the description box. Yeah, y'all just need the Discord link. My bad. All right, so that's it, guys. Let me get out of here, guys. Let me go enjoy the rest of my little bit of my evening. It was the little guy's Earth Day tomorrow, actually. So we was out celebrating it earlier. So we went to Sky Zone, and I got him with the GoPro on. I put a GoPro on a 4-year-old. Let that marinate. I strapped it on him on the chest harness, and he was on the trampolines and all kind of stuff. So that's gonna be some crazy footage when I upload it at some point. But yeah, he was like the coolest thing in the entire building that day because everybody who knew it was a GoPro, like, man, a 4-year-old with a GoPro. Everybody like, man, that's so cool, man. But he was just to capture his experience so he can enjoy it. So one day when he looked back, I'm like, man, I was at 4 years, I was doing what? But anyway, that's enough about my little scenario. Let me get out of here, go enjoy the rest of my little evening. I enjoyed this to the extreme fullest. Again, connect with us, WeTradeHQ.com. Connect with us on the Dagger Squad, whatever, Urban Economic Empowerment Show when it comes to financial literacy, budget analysis, trade lines, credit repair, government grants, dropshipping. Y'all know we do everything over there when it comes to financial literacy. So we're just trying to raise the bar, right? No matter how you look at it, what side you're on, what you ain't, it's about raising the bar when it comes to financial literacy so we can put ourselves in the best position to be what? Successful and profitable outside the system. When I say the system, meaning the normal, wear and tear reality, how they have us looking at life. Go to school, get an education, go you gonna work with somebody else. No, we want to be anarchy 99, so to speak. Right? We want to be challenging the status quo. We want to find ways to get to the bag on our time, under our dime. Right? That's what's most important about this, guys. All right. All right. So that's it, guys. Let me get out of here real quick. And I'll see you guys in the Discord room. I'll see you guys later tonight. Again, check out investing.com. If you want to be a part of mentor service, go check me out. Go find my link over there. We Trade HQ. Connect with me. It's only $1 a day. It's only $1 a day. Literally $1 a day. You the blue, $4 on that on the $5 foot long at Taco Bell. And got a stomach ache. Right? All right, that's it, guys. Let me get out of here, guys. So, Power Profit. Salute to everybody that stopped through today. I appreciate you guys. Enjoy the rest of your day. And I'll see you guys first thing tomorrow in the Discord room, in the Facebook group, wherever. Let's get ready to get after this bag, right? Let's get ready to get after this bag. Right? Thank you guys for stopping by. Peace, power, and salute to everybody. Enjoy your evening, guys.